of a little drop. We was around 84K almost a month ago. Now it's like seems like we're rebounding. Like, how y'all feeling about the market? Are y'all excited to get in, but are you still nervous, or does it just not matter? Are you still buying anyway? Just you can say it now, or you can put it in the chat. You know what I'm saying? Let us know like how you feeling about the market right now. You know. Okay, I see. Still buying. Still buying.
Yeah,
That's right.
Sunshine says she's still buying. So I love that. That's the rule number one. Like I was saying, shout out to Captain Rational. Rule number one is buy more assets. Rule number two, know when to stop buying assets. Rule number three, fuck you, pay me. Rule number four, cash. Cash is the position.
Mm,
Never neglect the cash position. So,
that's
we start out with buy more assets because that's the name of the game. If you want to get anywhere, you gotta buy assets. You gotta have assets. You know what I mean? A lot of people overlook that part. It's just about having the assets.
yeah. Anybody else? How y'all feeling? Where y'all at with it? You buying? You holding off, taking a break, or just yeah? Okay, we loading up. All right, all
Got the
right.
check still loading up. Okay, cool.
Yeah, yeah,
Awesome.
yeah. All right, we
Yeah.
got
One
some.
thing I will say about this time period is a great time to LP because some of these pools have just been like ranging real hard. I'm talking like I have like a 50% wide range and it's still just cooking, you know? So this time when people are fearful and stuff like that, it tends to be a really good time to LP, as prices collapse, yields go higher or APRs go higher, yields go higher. So that's also something to think about.
And you would say the yields go higher because more fees are being generated.
Yeah, because people are selling. There's still activity, even though people think there isn't any activity. You know what I'm saying?
Right.
Because it's red and not green. But that just means people are selling, right? People are
Mm-hmm,
going more into stables or, Bitcoin or what have you.
hmm
They're getting out of, these low cap alts and getting just straight into ETH or whatever the case may be. So you
hmm
still have activity. And then you have the fact, people get scared. So then they pull their liquidity. So now you have you're competing with less liquidity providers for the same money, if that makes
Right,
sense. So you're
right.
getting a better split.
That's real.
Yeah.
That's real too. Mm.
So yeah.
Okay, okay.
And then again, like I said, when we're in this like crab market or this sideways ranging, is kind of can be really good for especially like I know we were talking about Quaker like that Meteor Soul LP you were in and kind of like that and like I was in this Pendle ETH LP Ave ETH LP, and it's like it's just chopping real sideways and it's staying. Like I said, it's like a 40-50% range, 25% on each side, and I'm just still cooking. And the fees are coming in, and it's still great APR. You know what I'm saying? So just food for thought. You know, you don't have to think so much about your ranges and everything. You can kind of just let them cook. That's when I like the LP.
Yeah, yeah, definitely. Yeah. All right, then. Well, with that being said, we about to. I'm gonna share my screen, and we're gonna jump into the quick analysis of the top cryptos and the charts and whatnot. So, about to jump on share real quick. All right. Okay, y'all can hear me. Y'all can hear me. We good? Am I muted? Okay, okay. I'll just make sure I was because I ain't trying to keep going back to the screen. It's that big old mirror thing. All right, boom. So get straight to it. We looking at the big number one. We sitting at $91,231. Been just ranging all day. You see, not really much crazy movement. Just pretty much been around that 91,000. But we did have a nice drop. If we go to the week right here, literally, what was this? 2 days ago, yesterday, literally yesterday. We were at 94,000 and we've got a nice little drop down to 91K. Okay. But we're still up though, 4% on the entire week because a week ago we was at 88,000. You know what I'm saying? So looking at it on a month level, see this whole area right here from December 15th, December 14th, all the way until December 30th. Amazing time to LP because everything was just sideways, consolidating, just chopping. Like I got in, like we were talking about a Meteora Solana LP. I got in. I've only changed the range like twice because it's just been so sideways. So like these just when basically like if you're looking at a chart and it's looking real sideways like this for a few days, maybe consider getting in some LPs because it's not going to be up and down super rangy where you're going to have to be uh changing the range too much. You know what I'm saying? So yeah, so in the month, it's like I said, literally 0.65% price difference for the whole month. So that's pretty choppy. That's pretty choppy. Uh 6 month down 22%. Of course, we just had from August in the summer, we just been had a huge fall off. We all know about that. But in my opinion, we're gonna look at the year. In my opinion, this time really reminds me of this March April time period. It's not a carbon copy, but as we see, there's a dip. There's a little W looking pattern right here. That's a W, like from this 78 at 80K at March 8th, had a little rise up, and then another dip down, W, during in April, and then boom, just shot up from there. To me, this looks a little similar. Where we had that first November drop, November 9th, 20th, then we rose up again, and then another big drop, December 18th. Looks like a little bit of a W, and we might be forming another similar move upwards, just like we had up here. So, just in my opinion, my intuition, my gut is telling me that this time period is a lot similar to that March, April time period. Um, and then you know, yeah, and then what's interesting if we want to get astrologically right, um, so that April time period, right, was going into Taurus season started April 21st. You know what I'm saying? But it was going into that Taurus season. You know what I'm saying? And when this drop happened, that was going into Scorpio season. Well, basically leaving Scorpio season. If y'all don't know, like Taurus and Scorpio are like opposites. Like literally they're 6 months apart from each other. So it's to me a little ironic how this similar chart pattern happened within 6 months of each other. Just feels like that's why I really like crypto because I feel like it aligns a lot with astrology, with the moon, and it's just a more natural indication of money flowing in its alignment with just the stars. Because with the stock market, it closes every day from 9 to 5. It's closed on the weekends, so it's like it's not a true, in my opinion, true representation of like how money really is moving and how energy is really moving. So yeah, just want to point that out there with them being basically exactly 6 months apart. I feel like that's not a coincidence. All right, so next we're gonna look at Ethereum. All right, see what Ethereum talking about. Okay, so we at 3,169, still up. Moving a little sideways, but on the week though, Ethereum made a little push. It was at $3,000 last week. And ETH was like, oh yeah, I'm about to take off now. You know what I'm saying? So we got a nice 6% on the week. Okay. Had a little high. Seems like the resistance hit around 3,300, then immediately rejected. And it's just been riding back down since. Let's look at it on the 1 month. Yep. Just been riding up from that December 18th low. Um, but yeah, I really like to look at the charts on this level. Like I don't like sometimes I mean we could look at it on the candlesticks, you know what I'm saying? But I like like I like looking at bear charts like this without any technicals or without any and indicators, because it helps me understand support and resistance like easily, because I could just map it out with my own eyes. So for
What
example,
you
it's like
and what you
this
mean,
30.
Kwaku, is kind of just zooming out and looking at it on the line chart, right?
Yeah, yeah, like just looking down the line chart, just fresh, like with no
Yeah, nothing.
RSI, no like MACD, no nothing. Like this just helps me get a better fundamental understanding of support and resistance. So as I said, we Ethereum was rising up from 3,000, hit 3,300, and just immediately rejected. Like didn't even try to hit it again. I mean, it tried again, but it just rejected. So that tells me $3,300 is a strong resistance. And if we go back here a month ago, it seems like around 3,300 was also a little bit of resistance, a little under it, but that was also a little bit of a resistance. You know what I'm saying? Or actually, it was a support. A month ago, it was a support because we were dropping down, and then dropping down again. It was support. It was kind of bounced, and then boom, then we broke the support. So, which tells me once we get back over 3,300, as if whenever that happens, then we will flip that resistance into a support. So that seemed to me feels like a definitely price to watch out for when it comes to Ethereum. $3,300. I would like set an alert on my phone, be like, when Ethereum presses over $3,300, might be a time to, what I'm saying, make a move, or just keep an eye on it. I'm gonna check the chat real quick. Do you stockpile Ethereum like Bitcoin, or do you trade it like the other coins? Um, I don't. I mean, me personally, I don't stockpile Ethereum. I think Ethereum LP is a great idea, like a Ethereum and USDC. Liquidity. My bad. A liquidity pool with Ethereum. I think that's a good idea. Like Ethereum and USDC liquidity pool. Like I'm with that. You know what I'm saying? But like in my opinion, I'm not like that's not like that might be like 20%. Like that's like in my top five, but it'll be like number five. You know what I'm saying? Of course, I would say Bitcoin is maybe my most consistent investment, but I personally do that with like roundups and like weekly investments. So I don't even like actively like buy Bitcoin. I kind of just have it like on auto. You know what I'm saying? So I'm not even no. But of course, if Bitcoin is like low, I might buy a little more. But reality, like I'm not like trying to find the best entry prices with Bitcoin. I just know it's something you should just keep getting. But I don't have that same mindset when it comes to Ethereum. I kind of see Ethereum like the other altcoins, to be real. Like and it's not my favorite altcoin. So in that regard, I just see it like an altcoin. But I do think some liquidity pools would be a good move for sure. That's my opinion, you know. But I respect Ethereum for all it's done and all it's done for the space.
Yeah,
But all
I get
right,
what you're saying.
yeah, yeah. Okay, so let me see
And
what.
everybody has their own affinity to, certain assets anyway. You might
Exactly.
want to stockpile ETH, right?
Right.
For
Yeah.
me,
Yeah.
it's like a 32 ETH. Once I get 32, I know I could have my own full node. I'm cool after that, for real.
Yeah. Yeah. That's real, because then that's real passive income right there. When you got the node, oh, you set. Yeah. Yeah.
Yep.
All right. So next we're gonna look at the total market cap. All right. Definitely a very important chart to look at. Very, very important chart to look at. So as we can see, it has been moving sideways really throughout the day. Only 0.07 for the entire day. But on the week, all right, up 5%, rose from that 3 trillion and has surpassed that 3 trillion. When I was looking at since this whole period from the December 18th low, I knew that after we get over 3 trillion, we will turn 3 trillion into a support, because when we dropped under from that December 18th, we were around 2.9, 2.8 trillion, and I was like, yeah, we just need to get above 3 trillion, because these are just psychological numbers, and like especially the number 3, very powerful number. And Once we get over that three, I felt like, okay, we could, this bull market is not over. But I was thinking in the back of my mind, like, if we don't get over this three, this was a month ago. If we don't get over this 3 trillion, oh yeah, it really could be it could be kind of ugly. It could continue to get ugly. But I also knew, like, you got to be prepared for both scenarios. You know what I'm saying? Like, don't be attached to one thing, but have a plan for both scenarios. Like I was saying, like, if literally a month ago I was thinking, like, if the crypto market cannot get over $3 trillion, we're most likely going to have more downside. But if we can get over 3 trillion and stay over 3 trillion for at least a week or two, oh yeah, I think we're going to keep pushing up. That's just my analysis, and I can see that based off, this support and resistance and previous support and resistances. Like, if we go on the year chart again, back to that April time period, it was pretty much the same thing. Little similar, like under 3 trillion, but once we got over, it was up. It was up. You know what I'm saying? And we're over 3 trillion now. So yeah, why not? Why is history just might repeat itself? So like I said, that's just my opinion. I don't. None of us know what's gonna happen in the future, but we can look at the past and see, and try to relate it to what's going on right now.
Right.
So,
And what you're talking about is just using, technicals and logic versus emotion, what you
right.
want to happen. So,
Yeah.
yeah.
Yeah, like, it took me a minute to get that concept, to really have a plan for both. Like, when I first got in, I was like, I just only saw my perspective. I was like, it's got to happen this way, and like, I just had no plan for if it happened the other way. But like, you have to get to a point where you're completely comfortable with both sides happening. You have to get there, and it's really going
Yep.
to help you just be balanced within yourself. And of
Yep.
course, you're going to want it to play out the way you want it to. Like, yeah, we all want to see more highs in Bitcoin, but if it doesn't happen, we still need to have a plan for if it goes lower. Like, are we going to discharge some debt? Are we going to swap into some stable coins? Are we going to do some short positions? Like, what are we going to do? Yeah, it's
Yep.
not just the end of the world. You know what I'm saying? It's not like we're just gonna
Yeah,
cry
you
in the
do.
corner. you
Yeah,
know?
exactly. You start crying, but you just
Yeah.
gotta, have that mind frame of either way it go. I know, this is what I'm gonna do or this is what I'm not gonna do, but have a strategy set, for up or down, for it to work
Hmm.
for you, not against you. And
Right.
just not being emotional about it, and really just divorcing yourself emotionally from the money. You have to. You really just got to learn to do it. It's subconscious, and it's not as easy as it sounds. But you got to learn how to do it.
Yeah. Definitely. Definitely. It takes some experience though, but y'all, yeah, just stick with it. Yeah, we got this. We got this. I'm speaking from experience. I was not like this day one. So don't be a hard on yourself if it's taking you a minute to get that around your brain. It's all good. All right, so next we're going to look at Aave. Now, Aave is one of my top five favorite coins. I think it's highly, highly undervalued. In my opinion, it's at $167. Now, when you talk about stockpiling, oh, this is one that I am stockpiling because, in my opinion, anytime Aave is under $200, it does not stay under $200 for long, and traders really take advantage of those times. This is just from my experience watching Aave for a year straight. Anytime it's under $200, it is quick to go above it. You know what I'm saying? Like, let's look right for the entire year. Okay, how long was Aave under $200? Okay, so boom, we got about March 6th. So from March 6th until about May 6th, about May 8th. So that's about, boom, that's a 2 month range right there. Okay, boom. And then right again, we got November 11th, November 10th to now. Okay, now we're coming up on the 2 month range again, right? Isn't this interesting? Like, we're literally 4 days away from it being exactly 2 months since Aave dropped under $200. And like, whoa. It would be interesting if within 4 days we see Ave pump over 200. Maybe not, but if this is a repeat of or a similar experience as in March, it could play out that way. But basically, I'm saying that to say, for most of the year, Ave is under $200. This is literally based on the data, right? For most of the year, Ave is over $200. So in my opinion, when Ave is $200, that's one of my top. That's one of my top ones that I'm definitely putting some money aside for. You know what I'm saying? So yeah, Ave, I really like this coin. I might be a little biased. You know what I'm saying? I'm just be real. I might be a little biased, but it's pretty great to me as we can see up 14% on the week. You know, about a week ago, it was at around 144, 150. Yeah, I was like, man, they just giving it away at this point. You know what I'm saying? And it's up. It's up. It tried to break past 170, 75, and it had a strong rejection. So we pushing down. But in my opinion, that just gives us more time to scoop it up while it's under $200. Okay. We are not complaining about these prices. We are not complaining. All right. So, yeah. Think like if y'all got a coin that y'all really like and you find these resistance levels and you find these support levels, like for example, like a support level, a support and resistance level for Ave, in my opinion, would be around $200, and on the low end, maybe like 150. When you know those are the support levels you've identified, and you really like this coin, you need to take advantage. You know what I'm saying? Take advantage. So, I'm just sharing my opinion. You know. All right. Next, we got the total three market cap. Okay, now this is the market cap excluding Bitcoin and Ethereum. Kind of moving a little sideways, but up the day. So these are basically the altcoins, you know what I'm saying? Like Aave, uh like XRP, and this has a market cap of 889 billion. So yeah, definitely something to a chart that I also like to look at as well. On the month it's up around 2%. Let's see, Okay, so a support for this chart is around 800, that 800 billion. That's like the absolute low. Like basically if this chart goes under 800 billion, it could definitely be a lot of downward pressure moving forward, but as long as it stays above 800, maybe above say 800, 830, 840, then things should be still looking up, looking on the upside. But then if we look at it on the year chart, it had a high this year of 1.14 trillion. You know what I'm saying? So that seems like a bit of a resistance right up there. And yeah, yeah. So like on the low end, we're looking at around 800 billion, but high as a surprise, 1.14 trillion. Definitely look out for. Um, we can look at gold real quick. I know we're gonna get into that a little later, but gold at 4,459. Just been moving on up, 6% on the monthly. It had a little drop, a little fall off. So 4,500 seems to be a resistance for gold. Had a little bit of a fall off right here. But it's slowly creeping its way back up. We'll see if gold's going to surpass it or not. We'll definitely see. All right. The Bitcoin dominance chart, very interesting. Very interesting. This basically tells you how dominant Bitcoin is in the market. So Bitcoin currently has taken up 58.9% of the entire market cap. And right now that number is down one. That's because the 1 day is very small, but let's say on the weekly it's down 1%. So meaning the money is flowing to the other coins, more on the 1%. Okay. On the 1 month. But honestly, they're kind of just back and forth, like ranging within this 1 month area, like because the numbers are so low, negative 0.56%. Like they're really just having a little tug of war. You know what I'm saying? No one's really taking off on the other. You know what I'm saying? Bitcoin's still holding strong, but the altcoins haven't just like dominated Bitcoin either. So they're just doing their thing. They're doing their thing. But in the summertime, as you can see right here, looking at it on the 1 year chart, when Bitcoin was at 65% dominance, that's when, everyone was at Bitcoin's mercy, basically. Like Bitcoin was just booming, you know. So yeah, so definitely a good chart to look at.
Huh. That's me.
Oh, could you mute your mic, please? I don't know if you were talking about to us or you were talking to someone else. But if not, could you please mute the mic? All right. All right. So yeah, now we're looking at the others chart. This one is the top coins exclude is all the crypto coins excluding the top 10. Let me check that. Okay. Okay. Yeah, this is all the coins excluding the top 10. So this would be your lower cap altcoins like Aave, Chainlink, Avex, not Solana, Polkadot. Just the ones that we really like, but they just haven't gotten that super duper mainstream attention. But this is a great, interesting chart as well, just to keep in mind because some people say you can make more profit off of the coins in under the top 10 compared to in the top 10 because they're such lower market caps, meaning that their potential to rise is much higher. You know what I'm saying? So because you're getting in earlier, basically. So this is at let's see, we're at 0.26 on the day, 4.2% 6 on the weekly. Trying to look for a resistance. So yeah, support was definitely around 6.666% on the dominance. You know, but sometimes I will say with these dominance charts, like they don't always mean that the price of a coin is low. Like for example, just because the dominance chart might be low, like just because the dominance might be low, it doesn't mean that the coin itself is actually cheaper. It just kind of shows like so saying that to say I wouldn't maybe only be like, oh, the dominance chart is low, like I need to buy more. Sometimes it may the price may go lower. So this is something to expect as well. Like for example, we're gonna look at Chainlink right here, right? So as we see, around December 18th, the mark it was around 6.6%. Let's actually go back 6 months. Okay. So boom. So it was around even in October, it was like around 6%. Okay. Yeah, so that's definitely like a nice support. That 6.6% is a nice support for the dominance for the others chart. But let's see what the price actually was during that time, right? So Chainlink. Chainlink is considered in the others category because it's number 12. It's not in the top 10. It's under the top 10. So if we're looking at Chainlink on the 6 month, right? In October, even when the dominance was at 6%, Chainlink was at 16, right? And then again, when the dominance hit 6% again in December, Chainlink was at 12.6. So $12.06. So just goes to show that the dominance chart doesn't always mean that like a coin is at its lowest. It just, what I'm saying, it just kind of shows the where more of the money is in the market. So I maybe don't use it all the way like, oh, like this is the bottom is here. You know what I'm saying? Maybe it's not always accurate like that. So yeah, just wanted to let y'all know that as well. But yeah, Chainlink is also another one that's really dope, really dope. Down 11% in the past 6 months. Uh, you know. Also wanted to share this about Chainlink and Avalanche, which is, in my opinion, one of my these two coins to me are very very interesting, right? I personally feel like this is just my conspiracy theory brain. I feel like Avalanche is the red pill and Chainlink is the blue pill, okay? And let me tell y'all why, right? If we look at the Avalanche logo, it is a triangle. It has 3 points. Also, very interesting, it's number 21, okay? Number 21 in Chainlink is blue and it's number 12. So it's kind of flipped. You know what I'm saying? I didn't even know it was going to be like that, but it's kind of flipped. But if you look at Chainlink, it has 6 points. It's a hexagon. So it has 6 points, whereas Avalanche is a triangle, has 3 points. So it's like 3 times 2 is 6. So they just feel like a very complementary pair. You know what I'm saying? Like they just feel very connected in a really interesting way, and I find this very interesting because you can essentially like use the price action of one coin to maybe make a prediction on how the price action of the next coin is going to go. So for example, one thing I've noticed when it comes to Chainlink, right, if we go to um if we go to circulating supply, the circulating supply, that means that's how many Chainlink coins are currently in the market, 708 million. But the total supply, meaning how many total coins, Chainlink coins, can be put in the market, is 1 billion. Now, normally, when a coin has a high total supply, its price is tends to be lower. Like, for example, Bitcoin's total supply is 21 million coins. That's why Bitcoin is $100,090,000. But Chainlink being 1 billion is only $13. So for the most part, like a coin that has a total supply of 1 billion tokens, in I mean, not right now at least, should not be worth like $50,000, $90,000. It just doesn't. It's called tokenomics, and that's a whole nother thing. But it kind of just doesn't really align. And the interesting thing I noticed with Avalanche is Avalanche actually has a smaller total supply of Chainlink, right? And this total supply is 461 million. Like, and then we saw Chainlinks is 1 billion. Now, in that metric, really Avalanche should be just based off tokenomics, right? Avalanche really should be priced significantly higher than Chainlinks. You can even say almost double because as we see, um, Chainlink has literally almost double more tokens that total tokens than Avalanche. So you could say, uh, I mean, these are just like kind of rough, but you could say Avalanche should be priced almost double. If Chainlink is 13, Avalanche should be around 20, 26 or something like that. And one thing I picked up on at one point is that when Avalanche, so as we see right here, Avalanche is $14.16. Chainlink is $13.50. At one point, when all the markets, everything was red, but at one point, Avalanche was actually cheaper than Chainlink. Okay, like Chainlink was at around like 12.50, and Avalanche was at like $11. And I personally saw that as a great opportunity to buy more Avalanche because I'm like, according to the tokenomics, Avalanche should not be cheaper than Chainlink, especially if in my opinion, they have like this symbiotic relationship in a way. Like it just feels like that's really not supposed to be happening. So you're basically getting a potential great buy-in opportunity because we know that's going to change in the near future. So if we look right here, right? So at December 18th, Avalanche was at $11.39. Okay. Chainlink on December 18th was at December 18th was at okay. Well, they were basically around the same, right? They were around the same, but there was definitely a period. Okay, let's see. Maybe it was the day before. It was like 12:50. Okay, there was a period. I remember watching. I was like, nah, like Chainlink should not be cheaper than Avalanche, and even the same price, in my opinion. Like they shouldn't even be at the same price if you're just looking at tokenomics. And as we see, like Avalanche has made a nice move upwards from that $11 down all the way up to 14. You know what I'm saying? That's a nice move on the week 1 week. That's more than a 15% move. You know what I'm saying? I don't have a calculator to determine what that is, but that's more than a 15% move. And I basically kind of like saw that back then. I was like, nah, like that's not normal. You know what I'm saying? So I'm just saying I did buy some Avalanche around that time, but I one of my metrics for buying some Avalanche around that time is like really should not be cheaper than Chainlinks based on this tokenomics. Let me know if that makes sense to y'all. You know what I'm saying? Let me know if that makes y'all put in the chat or. But yeah, J Dog, what do you think about that perspective? You know what I'm saying? Like, I would love to know your thoughts on just that relationship.
It probably likely has to do with excuse me. It probably has to do with the amount of tokens in the supply because Avex's supply increased a lot based on staking because the staking is inflation. And then wait, let me double check my memory real quick. With Avex, I believe the staking is inflation and they burn the fees. I can Google it real quick to double check. But I would say that's probably what it has to do with the
Mm-hmm.
tokenomics, the
Mm-hmm.
price, because that's really what most things. That's why XRP price is $3, not 300. Tokenomics
Right.
or shit.
Exactly. Exactly. Yep. Yep.
It
Yep.
doesn't
It's
matter
like.
what the market cap is. A lot of people forget. You gotta,
Yep.
when it comes. Okay, so if you think about the TradFi market, right? When it comes to the stocks, how many stocks have already been issued and what type of stocks, right? That's what determines more about price than just the market cap. Is how much is actually out there. And then if they issue more stock, right now you're getting
Mm-hmm.
diluted.
Mm-hmm.
You see what I'm
Yep.
saying? So,
Yep.
and that's what
Yep.
happens with XRP. You're getting diluted every month. I think they dump, certain amount of XRP every month. The Ripple Labs does. That's how they fund themselves. Which I'll say this: them white boys are smart, okay? Because they created really, which is a shit, XRPL. The tech isn't that great, really. You know what I'm saying? Cardano is way better tech.
Mm-hmm.
Nobody's using it, right? But they
Yeah.
created it and they pre-mined all the coins and then they dumped the coins on the regular people and on the market and on private investors because that's what the whole SEC case was about. And they're dumping these tokens and they getting rich. These white boys know the scam.
Mm.
Yo, that's the one thing I can say about XRP and the Ripple guys. They know how to get some money because they pre-mined all them coins and they keep dumping them. They getting paid.
Wow. Wow. So let's look. Wow. Because yeah, total supply is 99 billion, and there's already 60
Completely
billion. So
pre-mined. Don't forget that.
damn, that is crazy. That's a
And I'm not
lot of.
saying that to say, when ETH first came out, yes, the Ethereum Foundation received some pre-mine, yes, of course, but it wasn't the entire supply that they could control and dump, and you had to go through them, and you know what I'm saying? So
Yeah.
I say that to say there are, like ETH, there was a bit of pre-mine, Cardano was a fair launch. Not everything was a fair launch, but there's, it's a bit of a gray area, but there's a certain way that you could do things to make it a little more fair. XRP, those guys are smart and they got a good bag off of that. And now you see what they really doing was, which the whole game plan the whole time was to get rich and then buy up acquisitions in the crypto market because that's why they wanted to buy Coinbase. That's why you see them doing all these acquisitions because XRPL is, again, I don't really see anyone using it. Maybe someone will. I don't know. I don't want to speak on that too much, but I don't see nobody using it. They
Mm-hmm.
came out with the XRP EVM for more people to use it. Who's really using it? You know what I'm saying? So
Mm-hmm.
at the end of the day, they're dumping tokens on people instead of giving them out as incentives. Nobody's
Mm-hmm.
going to use the chain. And I say that to say you can see what they're doing with their money. They're acquiring all of these, custody, crypto digital asset custody platforms, and what I'm saying, other adjacent or vertical integrations, if you will, but more on a TradFi kind of lens. Assets. What they're trying to do is get more assets under management. It's all full circle.
Mm. Wow. Yeah. So yeah, as we see, like XRP made a little pump over the last week. So 18% in a week. That's solid. That's solid. Because it was definitely getting hit like everything, but XRP was definitely getting hit around that $1.86 area. But yeah, definitely made a push up. And that's the thing about the XRP community. Like once it pushes, like for real, like it's normally not just a small push. Like it's like huge. Like they just take it all the way there. I still don't really know why that happens, but it's like they just be having meteoric like pushes up. You know what I'm saying? But then
Because
it
they're
just be
controlling the liquidity and stuff like that. It's a lot of. I can't personally say that I've seen these things happen, right? I'm not in those rooms and stuff, but just reading between the lines. Yeah,
because they own so much of it, like he's saying.
yeah, they control the market. You know what
Mm,
I'm saying? And if you're if you have relationships with centralized exchanges with a certain liquidity, and you have those insider relationships that they have, you know what I'm saying? Yeah,
hmm Yeah.
it's not that hard to pump something.
Mm, yeah. It'd be.
It's harder to build something people actually want to use.
Yeah, but that's how they get people to want to use it by pumping it.
But nobody's using it, so that can't really be true.
Yeah, yeah, it's what they want us to think, though. Yeah,
You
yeah,
know what I'm
yeah.
saying? Like, one thing I will say about XRP is, again, I can't prove this, but I personally feel like they paying all these influencers to talk about them. Because you can't tell me they're
Mhm,
not. Because nobody in their right mind would keep talking about them unless they was getting paid.
mhm.
And
Wow,
game is just game. You know what I mean? That's just the way the world works. And I'm just,
that's
whether it's
possible.
good or bad or whatever, but that's how I feel. Because there's just no way when I type in crypto on YouTube, everything is XRP.
Yeah,
You know what I'm saying?
yeah, definitely,
But I don't
definitely.
say that. If you got XRP and you like it, I love it. I'm not here to tell nobody what to have or what not to have. I was buying it sub $1. It was a great trade. It was probably one of the best trades this cycle besides Solana. Just like
Hmm.
super easy, super super easy. All you
Yeah,
had to do was buy it, wait, boom, get out. You know what I'm saying? If you got in sub $1, and then it went to 3, you was up,
yeah,
yeah, at least 3 4x. You know what I'm saying?
yeah.
Same thing
That,
with Solana, but at
oh
least
yeah,
Solana is having some motion.
oh yeah. The
You know what I'm saying?
president.
Solana's having some
Oh
motion
yeah.
on chain. I'm not seeing that with XRP up.
Right, right. Yeah, like Trump coin is on Solana. That's motion. That's yeah.
Yeah, when the president decides to dump his scam meme coin on your chain, that does say something. And
Yeah.
that actually marked the point where I was like, you know what? People still rock with Solana even with all the you know the hoopla. Not even the FTX stuff, just from a technical perspective of the Solana network and how, you know what I'm saying, their
Yeah.
proof of stake history thing has never even been audited and certain things of that nature.
Mm, mm.
And I won't get too much into it, but it's you can go down your own Solana rabbit hole. And then I seen that and I'm like, yeah, liquidity likes to be here. They're gonna keep being
Mhm,
there. So you know what I mean?
mhm, mhm. Oh yeah, oh yeah, definitely,
The
definitely.
best tech isn't always the best investment, and that reigns true for Solana because it is not the best tech at all.
Yeah,
But
I
you're gonna make
will.
some money.
Yeah, yeah, that's real. That's real. I think they're good with like just like how the iPhone like has really good like the app just looks so glossy and sleek and smooth. Like I feel like Solana apps and Solana platforms, they just look real smooth and they just give you that appearance of like, yeah, this is the place to be. You know what I'm saying? Just especially with the Phantom wallet, people saying that's like the best wallet. And I see why people say it's the best wallet because it looks very smooth. It just like it looks so user friendly compared to some of these other wallets that do not look as user friendly. But that doesn't always mean the best tech, like he's saying. You know.
But yeah, I would definitely agree. Phantom Wallet is what put Solana on the map, as well as the fact that it came out during the time when ETH gas was actually really super crazy. I don't care what people say today, it's not. If you weren't around in 2020, 2021, when you could have a very simple transaction be $50 and all you was doing was sending
Yes.
$10,
Yes. Yes.
yeah. So because it came out during that time, it took advantage of being
Mhm.
cheap and fast and not being
Mhm.
good tech. Ethereum was good tech, not cheap and fast.
Yeah.
You see what I'm saying? And
Yeah.
at that time, what people wanted was cheap and fast because Ethereum was just too bloated. It was just
Yeah.
too much money. You know what I'm saying?
Hmm.
And because of that, them being kind of in the marketing behind Solana, FTX, all of that. You know what I'm saying? Various other people who blew up during that saga who were invested in the marketing that they pushed for Solana is the reason why it got to where it got. And
Hmm.
there's a certain lendiness about it, and people still use it. So that's why, like I said, one of my one of my things is to gain more Solana exposure. And I was looking at Magic Eating. They have some USDC rewards. I was looking at, I'm still waiting for some SAR to come out. That's supposed to be coming out this month. But yeah, other than that, there's nothing really investable on Solana Network. That's kind of the other issue. There was never anything investable over there, even though I want to be a part of the market. It was never anything investable. Like a lot of those LPs aren't even super profitable. You know what I'm saying? So you just got to be careful.
Yeah. All right. Well, yeah. Looking at Solana though, hit sitting at number six, $136. Uh, Past week it definitely pushed up. In the past month, it was around that December 18th time. It was hit a low of 120, 119. That's definitely a nice push up from then, you know. But yeah, so that this 120 seems like a strong support. Like I said, if the price breaks under 120, that's definitely an area of concern. To potentially be more downside. But on the high, seems like 140, 142 is looking like a resistance because we hit that 142 and instantly dropped
Hmm.
down, instantly dropped down. And even over here, like it had the 140, it was using that support and then dropped under it. And then we just went into this slump. You know what I'm saying? Went into this slump. So, yeah.
Yep.
So,
And
Lana,
just
that's
looking at that on a monthly, it looks like, you know, 100, is kind of a good area to start dacking into on a like a downturn. But once it sort of breaks, like you kind of want to DACA to 100, and then once it gets to 100, you want to see, all right, are we going free fall or what? But that seems like a good level to buy in, though.
oh yeah. Oh yeah. Definitely. Mm-hmm. Yep, and it gave you a lot. It gave you multiple days. The market gave you 6 whole days of $120. So like you definitely had time. We definitely had time to get something together. You know what I'm saying? So, really see these as like the market is giving us time. Like it's like yeah, like come on, like let's get in here. So that's how I see these areas, and it's just all like a mindset shift. Like when the market is having these moments, just really we need to be, we just should just be grateful that we're just doing this and just that we're alive to be able to do this. Like
We're alive in the
really,
best time in the world. I don't care what nobody say.
we are alive to be able to do this. Like all this emotion, like oh I hate Bitcoin, oh I lose my
We
oh,
click buttons and make money out of thin air. You can't beat this time in history. People used to have to go and work their farm and kill a cow and sell the cow at the market.
yeah,
We ain't doing
yeah,
none of that. Clicking buttons, getting paid. Best time in the world. I don't care what nobody say.
yeah. Yeah, it's a beautiful time. Like so, just like in this market, like you just gotta learn to just anything that happens, be grateful for it. Anything that happens, we gotta be grateful for it. And it's a beautiful like it really shows you like how you can just be grateful for everything else in your life. If you can apply that kind of stuff to the market, you can apply it to your family, to your personal life, to your work, all that. So it's dope. It's dope. All right, so to finish it out, we looking at Cardano, sitting at 40 cent. Had a nice little 21% push up. Okay. In the past week, it was at 35 cent. Now pushed up all the way to 40, hit that 43 cent and dropped. But yeah, Cardano was definitely getting hit. It was getting hit. So as we see 33 was the low. Okay. And I like see 333 like that. That a little angel number is like, hey, y'all can get in, right now. And then boom, just shot up. You know what I'm saying? So yeah. 20 that was like the Christmas present, the Christmas gift, you know what I'm saying? Like the market really gave us a Christmas gift. They really did, bro. like they be or Kwanzaa gift because Kwanzaa for the gift day is on January 1st for Kwanzaa, so it was really a Kwanzaa gift. All right, so like really, we gotta be grateful. We gotta be grateful. But yeah, like this 40 is like a little support potentially, but if we break past under maybe let's say 38 cent when it comes to the Solana, or maybe 35, then might be headed back down to that 33 again. But 40 is looking kind of nice. 40 looking kind of nice. You know what I'm saying? As a strong little support. And then lastly, to sum it up, I'm gonna check out XLM. This is also a coin that I really like. I prefer this over XRP, in my opinion. And I think you can potentially make more profits off XRP, off XLM than XRP. But the past week shot up 17%. Very nice, very nice. Yeah, had a low of around what's that, 20 cent on the monthly. Boom, went all the way to 19. Yeah, on the 20. So yeah, really like that. 20 at 20 cent is a strong support for XLM. Anytime it hit 20 cent, boom, it shot right above it. It's like, nope, nope, we not doing that. It hit that 19, but that was for like one day and
Hmm.
just rose up. You
That's
know what I'm
also a
saying?
good area to buy on Stellar. That 20, if you can catch 20 cent,
Yeah,
that's a
at
good
20.
that's a good place to get in deep
Yes, yes.
in size.
Yep, yep. Like even going back here a month
Could you
ago.
show us what was that all time high this year? Go to
All
the
time
top.
high this year is
What was it? 50?
49 cents,
Okay,
50
right under
cents.
50. Yeah,
Yeah, yeah. So
50. Okay.
literally just had a huge
So
meteoric shoot up. What are you
that's
gonna
like a
say?
2.8, 2.3, 2.4x or something like that. So that's not bad. If you got in around 20 cent, like I was saying.
Right, right. Yep, yep. And even if we get close to that all time high again, yeah, that's like a two, three. You know what I'm saying? So and look, we still not
Hmm.
far from it though. We only at 23, so it's definitely still great times to get into XLM right now. Definitely great times. You know. So yeah, yeah. As long, like I said, as long as we can stay above 20 cent, because as we can see, it's definitely a downtrend coming from that top. It's straight down. But as long as we can stay above 20 cent, then maybe the downtrend is over. Maybe. But if we
Yeah, it
break
does
that,
look like so far it did hit that bottom
hmm
the end of the year. That 19.
hmm yep,
Yep.
yep, definitely.
And that's just about where it took off before that. So that's kind of, right on.
Yep. And then same in April. Same April was around that area too, that 22, 20 cent
Yep.
area.
So when you're
So,
looking at it on a line chart, that right there already tell you where you want to get in.
yep. hmm These are great times. We're in great times right now. Yeah. So, all right. So before I hand it off, right, I want to speak on a strategy I've been using on the Solana network. So, who in here put some comments in the chat or whatever? Who actually, my bad. Before I go into this, does anybody have a coin they want me to do a quick support and resistance for? Put it in the chat, or you can say it right now. If you just want me to search a coin real quick, I could look it up right now, and we can look at the support and resistance. Just let me know. Let me know. And I got you. Don't be shy. If y'all got one, let us know. But if not, we can keep pushing. But just let us know. I just want to use this time for that.
Zebek.
Zebek.
ZBCN.
Okay, let's spell that.
Please and thank you.
ZB Z. How?
C,
Oh, I see it.
like Charlie.
Okay, okay, okay. Zebek. All right, all right. Let's check it out. Hope it didn't. Okay, yeah, yeah, it didn't do that. It says delisted. I wonder why it said that. Maybe that's just. Is this the right one? Okay. Okay. Wait a second, y'all. I might have to. I might have to look at this. Okay, okay. I might not have typed in the right one. Okay. Z E. No, ZBC. Okay, yeah, I probably gotta look at it on another exchange. Yeah, okay, let's look at it from with Tether. HTX. Okay. All right. Cool. All right. Right now it's at 0.0028. So it's less than a cent right now. Okay. But on the weekly, it's up 18%. You know what I'm saying? On the monthly, it's kind of been doing a bit range trading around that December 18th. It seems like that 0.002 low 0.002 area seems like a nice support. Same down here, that low point, but a resistance is like that 0.003. Point zero zero, yeah, 0.003. Let's look at it on the 6 month. Okay. On the 6 month, it was looking like seems like a resistance around 0.05. So it's really just been downtrending for the whole 6 months, but on the 1 year, okay. Oh yeah, on the 1 year, it's still up, still very much up. So I don't know anything about Zebek, but it seems like if you knew about it last year, you're still good, regardless of this downwards trend motion that's been happening since May. You know, um, so if we want to expect to see maybe more upside with Zebek, I just see that we gotta, get past this 0.03. And if we get past that 0.03 resistance, things maybe could keep looking up. But otherwise, if we don't, it could just keep on trending downwards. That's how I'm seeing Zebek right now. But yeah, thank you for putting me on to Zebek. Let's see, was there another one? Any other coins in there? Let us know. Let us know if we got any other ones. No problem. No problem. All right. All right. Well, if we don't got any other coins, I just wanted to share a strategy that I've been doing with the Solana network, right? And so I've been purchasing Solana for about 2 years, and I just have kind of just been sitting on it. And I was referred to this platform called Meteora, and I was like, oh, okay, this is a way how I could really have my Solana I've just been sitting on working for me, you know, and uh, so over here, right, you can go to pools. This is like a liquidity pool website, right? It's a great liquidity pool website. So me personally, I'm not gonna show y'all my pool, but I have been tapping in with this Solana USDC pool. It's been paying me very nicely. I will say, like, I think I've done almost 10% on my investment in less than a month. So, and this is in fees earned. I've earned 10% on my investment. And this is in just fees. This is not in price action. Okay. This is just in fees earned on my investment in a month. So if this keeps going, that's 365% in a year. And that's not even including the price action. That's just including the fees earned. So if we add in the price action, that could be a whole nother statistic. You know what I'm saying? That could be double that. Who knows? But yeah, I just wanted to share with y'all Meteora. It's a pretty dope platform. I also have tapped in with another pool where you can, because basically when you do liquidity pools, you can either do stable coin to um, like a volatile coin, and that's the Solana USDC, or you can do two volatile coins. And I have another pool that's a Solana in Meteora. I was trying to find it, but it's probably deep in here somewhere. Um, which is also, yeah, right here, Met and Solana. So this pool, since this coin, Meteor and Solana are, they're very closely tied together. Basically, like, because when you do liquidity pools, you have to set your price range. So, for example, if Solana, you have to be like from $130 to $140. I'm going to earn the fees on Solana. But when the price goes above that range or under that range, then you don't earn any more money. So that's
Something I just want to state. I don't want to interrupt you quickly, but you only set ranges on V3 style pools. There are pools where there are no ranges for you to set. I just want to throw that out there. But keep going.
thank you, definitely, definitely. So yeah, V3, and so yeah, like with that, right? Sometimes it could be a little bit of like a hassle having to constantly have to change your range because the price is moving up and down, especially when it comes to a stable pool, like where you have a one stable coin and then one volatile coin. Like one is moving a bunch and the other staying the same. You got to constantly change the range. But if you find coins that you know are connected that normally stick close to each other, like for example, how I was talking about Chainlink and Avalanche, how in my opinion they kind of stick together, stick close to each other, or if you know, like for example, Solana is like the big brother, right? Everybody is under Solana. It's like big bro. But Meteor is like the little bro who's just trying to tag along and keep up. It like follows it around, like, and they just from what I've been experiencing with this liquidity pool is like I haven't been having to change the range as much because it follows very similar price action to Solana, and that's been pretty nice to not have to constantly go in there and switch it out and whatnot. Even though my returns are less in this Meteor and Solana pool, because as you can see, the volume is only I think that's only $2 million a day, but the volume of this Solana pool, oh no, that's actually that price is wrong. I think it was $945,000 a day, but as we can see in the Solana coin pool, it's been $56 million a day. So you will really be earning, like if you put the same amount of money in the Solana and the Meteor pool, you most likely will be earning more in the Solana to USDC pool that has a 56 million, because with liquidity pools, you make the money on the volume of transactions. You know what I'm saying? So, but it's still just like another, and also you get exposure to the Meteora coin, because for one, who knows, the Meteora coin might 10x in a few years or in a year. So I'm getting exposure to it while also earning more at the same time. Going back to what we were saying, it's all about the assets. You know what I'm
Yep.
saying? So
And one thing I
that's
kind
how.
of want to throw out there, if you don't mind, is because you
Mhm,
had
yeah,
that Trump up there, it just reminded me. Like when
yeah,
that had first dropped, right? I didn't LP as soon as it came out, but sometime in like January or whatever, I was LPing
mhm,
the Trump USDC. Yeah, it was Trump USDC, I believe. I was LPing, and sometimes it's not always about. Sometimes I mean it's always about trying to get a return. But when I had first LP'd, it was like the volumes had collapsed because everybody was like, "Oh, we're done with the Trump thing," and then it popped back. So I say that to say, if you're in a pool that is going to get some volume, and maybe it's just a bit cyclical, kind of stick it out, especially if it's still in range. You know what I'm saying? But yeah,
yeah,
that's what I like to do on Solana sometimes. When there's like a new coin or something that comes out, I'll LP it. Like I made good money on the Trump thing, and I didn't, and then I got out, but it was all like yield. You know what I'm saying? Like I made
mhm,
like a crazy amount of yield because you got to think the Trump coin was going up too.
right,
So,
yeah.
but
Now,
so you
interestingly
get so
enough,
you get two forms of earning, right? So you get appreciation and you get yield.
yeah. hmm So, but interestingly enough, though, I was looking at these pools and like they're not paying much of anything. You know what I'm saying? Because it's like I don't know why. Like it's saying point zero
Volumes
0.04
collapse.
B, like 0.04% TVL, like but this Solana is at 0.57%. And this is daily. You're making
Yeah, it's just
0.5
more volume.
daily, like yeah, yeah. So it, even though it has the most money locked in, its fees earning is,
Nobody's trading it, you
yeah,
know?
nobody's
So you're
trading it.
not
Yeah,
earning.
yep, yep. So
Everybody's trading Solana. You need it for gas. Everybody
right,
trade.
yep, yep, yep. So that's easy right there. That's easy. And also wanted to tell y'all about I wanted to show y'all Radium. So I just got into like liquidity pools with stable coins, and I wanted to show Radium Exchange because I found a pretty very interesting stablecoin liquidity pool over here. And Radium is one of the Radium actually has more money locked in than um, Meteora. So it's actually a much larger
It's
platform.
been around longer. Orca and Radium have
Mhm.
been around longer than Meteor. Meteor is like a year and a half, 2 years old, or something like that.
Mhm. So if we look right here, right? So this is a potential strategy that you can use, right? Instead of just taking your profits that you earn in the Solana USDC, because when you do a Solana USDC liquidity pool, you're going to get paid in Solana and in USDC. But what you can do instead of just letting your USDC sit or reinvesting it back in is you can actually check this out. You can go to go over to Radium and basically deposit into a stable. Oh, it's not letting me scroll down. Okay, okay, there it is. You can deposit into a stable coin liquidity pool over here that's earning you. You're not just earning USDC and USDT. You're also earning some Ray coin. You know, that sounds funny. Some Ray coin because they're doing weekly rewards. And I like stuff like that. I like stuff where basically I'm earning three different assets from investing in this liquidity pool. Well, even though two of the assets are always $1 because it's USDC and USDT. But the advantage of this is that since USDC and USDT are always $1, you're not risking your profits. Like it's not like I'm taking my profits and putting in it another risk asset. I'm putting it into a stable coin liquidity pool that's also going to pay me in a whole nother cryptocurrency called Ray, which gives me more exposure to that Ray while not having to buy it. You know what I'm saying? So I just think that, what I'm saying, using these two websites in tandem, Meteor and Radium, I think could be pretty cool. You know what I'm saying? Because Meteora, from what I saw, they don't have stablecoin liquidity pools. But or if they did, it was a little interesting. But with this Radium platform, it's pretty simple, pretty straightforward. You know what I'm saying? And also, this APY says 2.87% in
And that's on the
24
24
hours.
hour, which is
No, no,
crazy.
that's
Dang,
very
you doing
crazy.
2.8 on the daily, but then you also got to look at the 24-hour fees. It's 300.
Right,
You know what I'm saying?
exactly.
So,
So I was like, I don't know how
couple
they get that,
considerations to make.
but it might not be exactly 2.87% a day, but I can guarantee it's more than any savings account you've ever invested in your life. I know it's more than 5% a year. I know that. You know what I'm saying? So
Mm-hmm.
yeah, yeah. So
Shit,
I
most
just
of them ain't even 5%. You know what I'm saying? They at four,
right, right.
four and a
Yep.
quarter.
4.25. Yeah. So just wanted to share that with y'all. This is like kind of a strategy I've been using, where I basically invest in the liquidity pool with the Solana USDC, but I take my USDC earnings and I
And
bring
put
it
it
over
in
here to the
which one are
Radium.
you doing? That USDC, USDT?
Yes, that one because it's also giving
Okay.
me the weekly reward in the Ray coin. This other one up here only gives me the coin, the rewards in the USD1 and the USDC. So I would rather
Yeah, so you getting that extra rate. Yeah, we all about extra incentives and
yeah.
rewards. I like that too. Go back
Yep.
over the top of that. Let me see how much they was giving out a week. Was you
202.
getting?
200.
Okay, so that ends on.
It
Okay, so
says
that they telling you when it ends. That's the other thing about rewards. You can often find out how much is in there, how much, and when it
mm,
ends.
Okay, okay, got you, got you. But
So
they also could bring it back whenever they want, right? Yeah.
yeah, of course, but that's just letting you know as of right now, that's when it's going to end.
Right, right, right. Okay, well, hey, I'll take that for basically a month. You know what I'm saying?
Yeah, I
I'll
just
take
wanted
the
to kind of
rule.
see how that was looking, but yeah, that's not bad to lock in,
Mm-hmm.
and it's stable, so
Right.
you're
It's
not
no risk.
really, yeah, you're not really having super risk. I mean, USDC, USDT, the pair isn't crazy tight, but it's pretty good.
Yeah. Those are the big dogs of stable coins, those big
Yeah,
two
of the
right there.
centralized stablecoins, yeah.
Yeah, yeah, right, right, right. True that. So, yep. Well, with that being said, okay, okay. One more thing I can tell y'all about, right? Now, if you really want to even take it a little step further, right? Because I've been really like tapping in um, with this Solana stuff because I'm like how can we really take Solana and really maximize it for all that it's worth in a way. So this is a platform called Jupiter, and they're actually the number one website or platform for Solana. Like they have the most money locked in, as we can see, 1.7 $1.79 billion in there. If you want to, you can go to
Land over
Jupiter
here. Oh, you showing
and,
Jupiter land? Yep,
and I'm
yep.
on
Powered by
Jupiter
Fluid.
Land. You can go here and borrow from here. So what you can do also is you can put some money in, like say you just got some crypto you're sitting on, and you can, if you want to get more exposure to another platform, if to another coin. Hold on, give me 1 second. I'm about to stop sharing my screen just so I could disconnect my wallet real quick. Give
Okay,
me
no
one
problem.
second. Give me 1 second.
And we're at the 1 hour 12 mark, just in case when you upload that, if you want to take out your wallet.
Oh, I forgot about that too. Okay, okay, okay.
Yep, 1 hour
Bet, bet,
12.
bet. Okay, okay, okay. Thank you, thank you. Okay. All right, all right. So, what you can do, so what I'm sharing with y'all is how you can basically get more exposure to more coins in a way, but also allowing them to work for you. So you
Okay,
can
you want
come
to show
like,
them how to do the leverage looping or something over here?
I mean, I don't know if that's what it's called. I don't know the term for it, but this is just another strategy to get access to this coin called Jupiter LP. It's what's called Jupiter Liquidity Perp. It's some word. I
Jupiter
forgot.
Liquidity Provider Token.
Yes, Jupiter Liquidity Provider Token, right. So what you can do is, I really like how they do this deposit and borrow feature, where you can basically deposit collateral and borrow out in a single like in a single transaction. Says normally to do that would be two transactions, you got to pay two gas fees. Um, Oh, did I share my screen? Oh yeah, I did. I'm tripping. Okay, okay. So, but now you can. So basically, right? If you just got some money that you want to basically make work, but also get access to this Jupiter platform as this Jupiter coin as well. If you deposit, say, $100 in here, you're going to earn 6.6% APY on the Jupiter token, which is going to basically over time pay you in more Jupiter token from just sitting it in here, from depositing it. And then when you take that bar out, say you deposit your $100 in Jupiter liquidity provider token, you're earning more Jupiter liquidity provider token, and then you can take that borrow money out, reinvest that into another liquidity pool, or put it in this Radium stable coin, which is going to give you access to the rate coin as well. So it's like basically like you can just get access to these coins by not just buying them outright. You know what I'm saying? So yeah, that's pretty much the sum it up all together. You know what I'm saying?
To
If you
kind
want
of tighten it up a little bit for you, Quaker, what you
to,
kind of saying is, how to gain exposure to these coins without buying them, which is one of the novelties of this market, right?
yeah,
So I can just like you saying, okay, I throw my collateral up there, like we was talking about. You got to have some sort of assets, right?
Hmm.
Throw
Hmm.
some collateral up there, borrow a little debt against it. I'm
Hmm.
taking them stables. I'm throwing in the LP. Now I'm getting exposure to, like, say I get in that Meteor Soul Pool. Now I'm getting exposure to Meteor because I'm earning the Meteor token,
Hmm.
right? So this is how crypto works and how you can get exposure to multiple assets. And another way was how he was showing you that the stablecoin pool on Radium has Ray, excuse me, has Ray incentives,
Yep.
right? So now, which was similar to Uniswap when Unichain had dropped. If any of you guys were involved in that, they had Uniswap incentives, right? And that those incentives are a way for me to earn a token for free, right? Because this is on top of the yield, the actual fees, right? So this is for free. This is extra that they're giving me to reward me for supplying liquidity to their platform to allow people to have trades and deep liquidity for their trades, right? So this is free exposure I'm getting to the Ray token, even if it's 0.2% in Ray. Who cares? That's free exposure to a token
Yep.
I don't have to buy, which again is a novel concept in DeFi. You don't have that nowhere else where you put some money up and then somebody say, "Hey, you know what? I got this token. Let me give you some of that too."
Hmm.
Ain't nobody doing that.
Right. So just to sum it up, right? If you, it's just a potential strategy using all three of these websites in tandem, right? Say if we do two liquidity pools on Meteor, we do the Meteor token with paired with Solana, and then we do the Solana token paired with USDC. We're currently
One thing I
getting
do want to
exposure
add,
to. Go ahead. What
sorry,
were you
one
saying?
thing I do want to add is that Meteor is having points right now, as you can see at the top, because they will be doing an airdrop. So that's also another way to gain some more free exposure.
Oh, how do you get the points? You just hold it.
Yeah, so the points, I think you just have to LP and then you earn points, I'm pretty sure.
Oh,
Or
okay.
swap on
Okay.
Meteor.
Damn. See, amazing. So yeah, so right, look, Meteor and Solana, right, and then Solana and USDC, right there. I'm getting exposure to three different coins, right? That's Meteora, Solana, and USDC. I'm earning fees in those three coins, so I'm already invested in them, but I'm also earning fees on top. Okay, boom. Then you come over here to the Radium. I mean, not to Radium, and you taking your USDC profits that you earn in the Meteor pools, you're basically parking your profits right here to earn to get also get exposure to the Raycoin. So you're also earning more on your profit and you're getting exposure to Raycoin. So that's four coins that we're basically getting exposure to. And then if you want to, you can take some of those profits from the Meteora, Solana, and or the any money you got, whatever, and you could drop it over into this Jupiter Lend. You can deposit that in and earn exposure with the Jupiter liquidity provider token, and then borrow out of it, and then use that for whatever you want to reinvest back in or whatever. So that's basically how many coins did we just say? Yeah, it's
That was
five
five, yep.
tokens that you're basically exposed to, and you could basically like loop that all around. And but most people they're just like, yeah, I got some Solana, I got some Meteora, I'm holding it, yeah, yeah, yeah. But I'm like, no, we're actually like earning it, like we're like earning it constantly, not just like
Yep. You
constantly.
paying
You know what
for it
I'm
and I'm
saying?
getting it for free.
Yes, yes. You paying for it, we're getting it for free. So,
It's quite the concept.
mm. So yeah, a lot of these people who talking about Solana and they talking about meme coins, but I'm like, now let's talk about real platforms on Solana, and really how to maximize it for what it's worth because the fees are great. To be real, the fees are very good on here.
No, yeah, you can easily do, you know what I'm saying, 10% a month on Solana, Sol USD. I mean Sol USDC LP. I mean that's been a given for like the last, yeah. You know what I'm saying? Since 2024 when the market popped off again. I mean
Hmm.
even a little bit before that, but you then could do that with a fairly wide range too, nothing super tight. Like Rico, I'm not sure how wide your range is, but a
I have it.
30%,
I have it the
15% on each
widest.
side or something.
Yeah, I just do it the widest it goes. Like I don't even be trying to mess
To
with it.
rebalance or none of that. Yeah, yeah,
Yeah.
exactly. That's how I like to do it too. I like to do it like that too. Um, and somebody had Okay, Curtis had asked about when I said V3, what did that mean? So I just kind of wanted to quickly explain that while we still on here.
Yeah, yeah.
So on the pools, rather.
Mm-hmm.
So V3 style. Okay, so Uniswap has a certain type of liquidity pool that they have. Okay, then you have Curve and they have a different type of liquidity pool, right? Like with Curve, it's more of like a it's more of a V2 style where it's 0 to infinity, but Curve, the actual smart contract itself is rebalancing your liquidity in the background as if it's concentrated like a V3 style, right? But just to kind of stick with what we're working with today, more on the Uniswap style. I mean, Meteor has the ability to shape how you put your liquidity in, which is a bit different from Uniswap and Radium and Orca, which don't have the ability to shape how you put your liquidity in, right? So we're just gonna stick with a classic how Radium is and Orca and Uniswap, okay? So the way that they work, the V2 stands for version 2. If you're not technical, you don't really necessarily probably are familiar with that type of acronym, but it's just talking about, I created a product or software and I had version 1, V1, then I updated, V2, updated again, V3, so on and so forth. When you go on Aave, you see V2, V3. Well, you actually probably don't see V2 anymore, but you see V3 and then you'll see V4, right? That just means that's the updated version, the new smart contracts that they pushing, right? So that's what that V2, V3 means. So V2 style pool is a classic 0 to infinity, which means your liquidity is distributed over the entire price curve from 0 to infinity. Your capital is always in the market, but it's not as efficient, right? Because you're spread all the way. You see what I'm saying? And then the V3, it introduced the ability to set a concentrated range, right? Which is what we call today concentrated liquidity. You might hear a lot of people say that instead of V3. So what that allows us to do is what Quaker was saying is to set a range. So I can say I want to supply liquidity from 100 when Sol is worth 100 USDC to when Sol is worth 200 USDC. That's my range. It's not 0 to infinity anymore. It's 100 to 200, right? So that's a set range. So once it's below that, I'm no longer in the market. Once it's above that, I'm no longer in the market, which means I'm not earning any fees. What this allows us to do is concentrate our liquidity around a specific price to increase the amount of fees that we're earning. Is that plain and simple and clear for everybody?
And check this out. I think that Meteora has V2 pools as well,
Yeah,
where
they
they
have
let you.
V2. The
Yeah.
difference I was just stating is that Meteor allows you to shape your liquidity, right? So in Uniswap, what happens is, or Radium or Orca, what happens is, yes, I have a V2 or V3, so I can just do 0 to infinity, where my money is just in the market. I never have to worry about rebalancing or checking my range or anything. I'm just earning, but I'm
Mhm.
earning less fees because I'm spread so thin, right?
Yeah.
Does that make sense?
Yep. Yep.
Now with V3, it allows us to set a particular range. That's why I was asking Quaku, do you have a tighter range, wider, right? Because we can set where I want my liquidity to be in. I want where I want to supply, right? And the difference here with Meteora or something like LFJ versus Uniswap is that with Uniswap, so if I say 100, if I want to supply liquidity in Solana USDC from 100 to 200, right? At each price point, it's called a tick, and I have the same amount of liquidity spread evenly distributed across from 100 to 200, evenly distributed across those ticks, right? So if it's 100 ticks, it's $1 a tick or whatever, right? Evenly distributed. Now with dynamic liquidity, which is Meteor or LFJ, they allow me to shape it. So instead of all my liquidity just being, $1 a tick, I can say, I actually want, so to go back, if I say my range is 100 to 200, I can say, I actually want to push more liquidity on the bid ask side, right? So what that means, I want to push more liquidity towards 100 and towards 200, right? which allows me to say put $3 in, each little bin closer to $100 versus $1 per each bin spread out evenly, if that makes sense. But it just allows you to shape the liquidity where you want it to be, closer to 100, closer to 200, more in the middle, or spread evenly. And with the Uniswap, you don't have no choice. It's just gonna be spread evenly regardless. So hopefully that was a clear explanation.
Check this out. This is kind of cool. A lot of y'all might not know, but Kodak Black made his own coin called Yak.
Oh yeah, on all this I seen that, and Almighty J did one too. His little cornball self, he did one too. But
What?
Kodak did drop one too.
He got a liquidity pool, a Yak and Audio liquidity pool. $2,000 in 24 hours. 3,000. That ain't bad. 1 million locked in. That ain't bad. You know what
Yeah,
I'm
and you
saying?
can earn rewards if you want to go on all this and listen to his music and stuff and tap in. You can earn some stuff. So
Hmm.
there was
Yeah.
another question too. Somebody said,
Hmm.
"Is this a way to replace your monthly income with LP?" Yeah, you can do that. Yep, that is the way to replace your monthly income with LP. The one thing I will say is if that's what you're going to do, you need to be a bit more mathematically technical with it in a way, because a lot of people don't calculate the volatility in their LP, and that does matter over a longer time frame. If I'm just trying to earn some tokens, I want to have more Solana, I want to have more USDC. You're making money and you're profitable, but you know, when you really start to evolve, then you want to, especially if you're looking to live off of this, you kind of want to start to factor in that volatility. But yeah, this is how you live off of your LP. You just throw some cash in it and it's printing fees every month. You know what I'm saying? You could do the same thing if you had $1 million in stable coins on chain and you earn 10%. That's 100 grand a year. The median American salary is 50. You know, so yeah, that's how you can live off of this stuff. And mind you, guys, there are people who actually live like this, completely bankless, who really live off of this stuff. It's very possible.
Yes, indeed. And we can take our money from the Solana platform, bridge it over to Arbitrum, take it over to Avalanche. Like, we can do so much, We can do a lot. So, that being said, I'm going to hand it off, you know, to the real. How do I pronounce again? Zarania? Zarna. I keep struggling with this. Zarena.
Zariana.
Zariana. Yes. Pass it off to the real Zariana. And you know what I'm saying? She's about to blow y'all head tops. I mean, we already been having that happen, but I'm excited to see, the game that we got. You know what I'm saying? It's coming up. It's about to come through. So appreciate y'all for rocking with us. This has been very fun. And I'm glad just being able to share this and help and educate. Hmm.
All right, I'm
I gotta remember
just setting
this
up my
receipt.
chart here, and then I'll share my screen with you guys. Let's get rid of this TWAP. All right. All right. So thanks, Kweku. Your technical analysis was on point as always. There's a few things I do want to look at on the technical side. Let's do share screen. All right. Let me know if you guys can see my screen.
You good?
I'm good. Okay. Cool. Okay. So what I'm showing you guys here is ETH in terms of Bitcoin. Da, da, da. Yeah, I'm on a weekly, so each candle of the week. Let's zoom out. So let's see. always forget how to get rid of the candlesticks. There it is. Line chart. All right. So just so we can kind of see roughly. So if you look basically like here, right? This entire run ETH was outperforming Bitcoin, right? And then we see the complete down. Bitcoin was outperforming back up. As you can see in April, this is when ETH did that crazy move, right? Now we're kind of, if you can, are we on that level? We hit the level. Yeah, we kind of right in that same area. Um, and so kind of what I just want to show you guys is, well, one, just looking at ETH in terms of Bitcoin, this tells you which one is really doing the most movement, has the most motion right now, so to speak. And then if you are a trader, you can use this to help you say, oh, okay, well now maybe I should go all in Bitcoin. You know what I'm saying? ETH is bottom, let me go all in Bitcoin. Okay, Bitcoin is top, let me switch to ETH, right? You can kind of use that to help you if you are trading both of these pairs. But based on this, ETH had a run, it found a little bottom here, and now, you know, I do suspect Bitcoin may outperform for a while. And then ETH gets back in the game. Let's look at Bitcoin versus gold. This chart is important to me because I value my wealth in gold, not dollars. So this just tells me like Bitcoin is worth something in gold, essentially. Okay, so you guys can see here, kind of Bitcoin bottom out, and we are in the period of looking to see Bitcoin outperform gold now. Because remember, gold was outperforming Bitcoin, and now we're looking to see, right? Let me just zoom out a little. This entire downtrend is gold outperforming Bitcoin, right? This entire 2024 uptrend is Bitcoin outperforming gold, right? And then we have, again, same thing.
Looks like a head and shoulders pattern also.
Yeah, it does have a bit of a pattern to it, doesn't it? Doesn't it? Even if you kind of look at it from that 2020, yeah. That's why I really do like looking at the line charts. It just gets rid of all the noise sometimes, and you can really see some stuff. Yep. So just showing you guys this to say, looking for Bitcoin to start outperforming gold again. Um. Oh, something I also wanted to show you guys. A lot of people are sleeping on Monero. Let's go back to candle. Let's do measure. So from kind of when things start to pick up, November, right? That's 200% from that top. Let me get rid of that. Or another way I like to look at it is when Bitcoin's doing all that craziness and it started to go down somewhere here in August, and then even October right here you can see, right? That was that period of time where we had that big liquidation event here. And Monero wicked all the way down here to, what was that, 260? 264. But then you can see the previous week and then the next week, like you can see it didn't have too much effect on Monero. It's kind of what I'm trying to say. Whereas a lot of alts and even Bitcoin was bleeding after that, right? Monero went on to do 77% while everything else was doing the opposite, right? Going down 77%. So just remember, there's always a bull market somewhere. And I actually really do think privacy is going to catch its well, it already has caught its bid, but it's going to significantly catch its bid this cycle. So just more on the zoom out side, you can see, let's do a little bit of a rectangle action here. Okay, we can see Monero was straight up consolidating from, we could even just move this here. So we could say June 22 to December 24, just straight up consolidating. in between this here area. That's how long you had. You had 2 years to get in on that. From 95 is the bottom to 195 at the top. And you know, if you were buying Monero during this time, you probably got like an average buying at like 120 or 40, somewhere around there. So imagine you was buying that whole consolidation period. Now, here we go. So, right? 164%. That's not bad if you was buying the top. So yeah, I know a lot of people focus mostly on Bitcoin, but in my opinion, Monero is what Bitcoin was actually supposed to be, which is something that is actually fungible. Right? Bitcoin is not fungible. Which basically means that, so like if you know what an NFT is, which is a non-fungible token, which means it's each NFT is its own thing. You can't swap one for another, right? At a one-on-one, it doesn't work like that. But each Bitcoin, or rather each Monero, I can do that because it is a private chain, a private network, and nobody can necessarily ban or blacklist my set of Monero. You see what I'm saying? With Bitcoin, a certain set of Bitcoin can be blacklisted, right? We've seen that happen. Hackers take this Bitcoin and now they can't sell it nowhere. So Bitcoin isn't really that fungible. Yeah, and privacy is a fundamental human right. So you should always have some involvement in the privacy side of things in this market. Especially you new people, because a lot of you guys, y'all don't have no real privacy on chain. Like, when I came out into this game, really like on chain 2020, 2021 and stuff, like Ethereum Foundation, the grants that people were getting, it was coming from a Tornado Cash address, wallet address, because they didn't want to dox their wallet. So they were using privacy, right? So that people couldn't see all, $100 million they have in this wallet address. They only see the $5,000 that they were getting for their grant, right? Or for whatever work they were doing for the Ethereum Foundation. So, from its inception, privacy was big in this space. Kind of the people who have been here, we still maneuver in that way, but a lot of you new guys, y'all don't move with no type of privacy on chain, which is sad to see. No type of privacy on chain. It's very sad to see. But yeah, anyway, I just wanted to show you guys Monero. This, don't forget about this dark horse, because this thing is gonna go. Okay, let's just do a quick let's just do a quick price thing. Right, this thing is gonna go from its top here, 530 to 2,000 in no time, and higher. And this isn't about price predictions or necessarily that type of stuff, but this is just about the way the market the way the market is moving, and people do value privacy, and people will value privacy even more as they begin to actually, governments are getting involved in this stuff, and they're hiring people to start tracking you on chain and stuff. People are going to start valuing their privacy more when they start seeing, oh, okay, I seen you on Coinbase buying Bitcoin and it's all going to this wallet, and you don't even know how to consolidate UTXOs in a private manner. You don't even know about using silent payments, right? Because a lot of Bitcoin wallets don't even support silent payments, right? People don't even know that that's a thing that you could do with Bitcoin. So just kind of throwing that out there. Get a little bit into privacy, you know. Let's see. It was a question. Okay, some comments. Okay, cool. Let's get back. And then last but least, let's just kind of look at gold. Oh, actually, I want to look at the ISM too.
Someone asked, where do you start in private? Curtis asked.
Where do you start in private?
Hmm.
Uh, if you could ask it more specifically or in a different way, maybe it'll help me give you a more tailored answer. But where, I'll say from a personal perspective, where did I start? I started when I realized I was buying Bitcoin, and Bitcoin was a public network. And then that's when I got into Monero. That's when I'm more of a cypherpunk at heart, right? Like privacy is a fundamental right to me. The government is not involved in none of my business and stuff like that. That's why I don't like stocks and stuff like that, you know? Um, but that's how I kind of got into Monero. Was I was like, oh, okay, it's a Bitcoin thing. Like I actually read the Bitcoin white paper and kind of really got into the cypherpunk movement, and I found Monero, and I found Zcash as well. Zcash was out at that point in time as well. But for me, the ability to have default privacy was the most important versus Zcash where it's optional, and then you fast forward to today where exchanges gave Zcash, basically, and Monero, they gave them basically an ultimatum. They were like, get kicked off the exchange, or work with us a little bit with some metadata or something. And so Zcash changed some addresses. I don't want to get too into it, but I'm not saying it's not still private because the ZK part of it is very, very technically sound. You know what I'm saying? It's just the fact that the privacy is optional. And Monero is default at a default level. Um, but yeah, where do you start in private? I would just say with the recognition of what is private and what is public. I would start there. I would start with you need to accept in your heart of hearts that you have the right to privacy fundamentally. Just like you have the right to self defense fundamentally in your heart of heart. You know what I'm saying? You got to know that. Um and that's where I would start, and just maybe start dollar cost averaging to a little bit of Monero every now and then. Or maybe you are into Zcash, right? Um yeah, whichever one floats your boat or both, whatever the case may be. But just kind of do a little bit of history into, private blockchains. Why did Monero even start? Why did Zcash even start? Why, like, what even brought about these particular networks? Why was there a need for them? So, yeah, that's where I would start is what is the public network and what is the private network and what are the differences, and go down that rabbit hole and figure out what speaks to you. But just remember, privacy is a fundamental right, human right. That's where I would start. And then beyond that, just recognizing when you're on chain, particularly Ethereum or Solana, everything you do is public. And when you're sending money from centralized exchanges to a wallet that is now what I call a docs wallet, because that centralized exchange now has it tagged and bagged, and it say that goes to Curtis C. You know what I'm saying? So just start with the recognition of that type of stuff and learning how to move on the blockchain. A lot of people don't know how to move on the blockchain. And what I mean by that is using your fundamental right of privacy. So I don't know if that answers your question.
So maybe a strategy you can use is like if you use the Coinbase, you can buy Coinbase, buy your assets on Coinbase, transfer it, swap it over to Monero, save a little bit of Monero,
Mm-hmm.
and then send that money from Monero to whatever
Yep, wherever you
platform
want to go.
you choose to do whatever you want to do, you know. So
Yep.
you're like dollar cost averaging with Monero, but still able to
Yeah.
interact with these other platforms.
Yeah.
Yeah.
I quite like that too. I quite like that. Yeah. And just leave a little left over each time, and then
Yeah.
you'll end up building a bag of Monero before you know it.
Oh, that's good. Oh yeah. I
I
could
like
do that.
that.
I could do
I
that.
like that. And it's interesting because that was, I still utilize that. I don't want to get too much into what I do privately. I'm gonna have to take a pause on the recording for all that. But um yeah, hopping through Monero was always a sound option and has been since its inception. People weren't hopping through Zcash. I'm just straight up saying, you know what I'm saying? People were hopping through Monero. Dark web, dark net, they using Monero. They not Zcash. You know what I'm saying? And again, this is not to say that the the zero knowledge proof technical side on Zcash is inferior. It's actually superior to Monero's tech, but Monero is still privacy by default, which carries a different type of tone, a different type of weight, a different feeling. You guys understand what I'm saying? Versus the optionality. Um and yeah, like Kwaku said, that that is a good move. Like I said, that was kind of basically what I was doing. Like I said, because I got in when I got in, it was USDT. There was no, there was no real market. You know what I'm saying? Like this is 2018, 2019, really 2018, 2019. We talking right now when I first got into Monero. So what I would do was I would get some Bitcoin, Monero, let it sit. You know what I'm saying? Come back after lunch. Like I would do it in the morning before I go to class. Cause I'm on campus before I go to class, swapping into Monero, sitting in the wallet. After class, I go to lunch. Been a few hours, so it's had some time to marinate. Which helps. I can never say the word correctly. Obfuscate your your UTXOs further. It gives you just more anonymity on chain. And then from Monero, if I wanted, like when I actually wanted to buy Bitcoin, I just wanted to do it privately. Then from Monero, I would swap back to Bitcoin and leave a little bit of Monero in there. And then that's how I started to build a bag. And then I ended up just buying more Monero than Bitcoin. And yeah, like the only thing I probably would ever be a maxi of is Monero. It's the only thing that actually speaks to me fully and completely. Like the ability for me to be in any country, anywhere, spending Monero and nobody knows. Next level. And the transactions are pennies. Pennies. The only bad thing about Monero is the fact that you gotta wait for the block time to sync. That's literally the only negative. You know what I'm saying? You gotta wait 15, 20 minutes for a block time to sync. It's the only negative. Um, alright, so let me show you guys the ISM.
Your screen
Uh,
is not sharing.
which is that?
Your screen is not sharing.
Oh, okay, let me go back. Thanks. Start screen share. Alright, so the ISM. Again, this is just showing us the business cycle, global business cycle. And the one thing I kind of want to talk about, Kwaku kind of opened this up with how do we feel about the market and, things were down and so on and so forth. And a lot of people were calling for the bear market. But from a fundamental technical perspective, we never had a bull market. So that's something I think a lot of people need to sit with. Like, that's just a fundamental truth. And it's not to say there wasn't a market specific bull happening, like Bitcoin went up, right? There was a crypto market specific bull, if you want. I call it the Trump pump, right? Where things did go up, but there was no, how do I put it? Global bull market, if you guys kind of pick up what I'm saying. Like, there was no euphoric period. That's what I'm trying to get to. There was no euphoric period where your cab driver is telling you about this new coin he bought and he made $10,000, right? Like, we never got to that place. And it's not over until the fat lady sings, and the fat lady is your Uber driver telling you about some coin he made 10K on, you know? And then, like I was saying, from a fundamental perspective and a technical perspective, like, there has to be global liquidity for anything to pop off. That's just the way this whole game works. It's just the way the whole game works. And kind of touch on how crypto intersects with TradFi and why they need us and why crypto would never die. And I was telling people this way before Trump came in with all these bills and this bill and that bill or whatever the crap, right? And the SEC is now friendly or whatever. I don't care if the SEC brings cases. That's great. Because, Richard Heart beat his case. Nobody likes to talk about that, though. He beat them stone cold. People like to talk about Ripple Labs beat them. Nah, that's not what happened. They didn't go through with their appeal, because if they went through with their appeal, they wouldn't be able to create any more securities products as Ripple Labs. Okay? So, and they knew they had a friendlier SEC, so it didn't make sense to go through an appeal where they could end up not being able to have any SEC, be able to create any SEC products like securities or anything like that, funds and stuff like that. So they dropped the appeal. You know what I'm saying? But even besides Trump being so-called friendly and all of this, this was bound to happen. What people don't comprehend is that when China, Japan, which was one of the biggest, buyers of U.S. Treasuries, and they say they're not buying any more Treasuries. Okay, they have to find a new buyer for these Treasuries because the only market or the only thing the U.S. has is military and money, and the money isn't even real, right? We know that it's just paper. It's backed by Treasury debts and stuff like that. So I say that to say, a lot of people felt like, we were crypto was down, it was dead, and Trump revived it, and that's just a narrative. You know what I'm saying? This was bound to happen regardless if it was Trump, if it was Kamala, if it was whoever. This was bound to happen because they need this market. They need somebody to dump their shit bonds on, their shit real estate, their shit private credit on. They need somebody to dump it on. And it's going to be the unsuspecting retail market, as always. So they need us. Never forget that. Like they need stable coins. Otherwise, if Tether didn't wasn't created and they didn't start buying T bills and treasuries, you know what I'm saying? Like somebody has to fill that void. And that, for so-called political reasons, certain countries are no longer doing that. Which the whole world is a stage and there's a whole bunch of backroom deals being done anyway. So I don't
So
put too much on that, but
So
yeah.
with the stable coins, like, isn't that what the Genius Act was? How they're going to make the stable coins backed by treasury bonds, which is basically going to get the retail people to reinvest into the treasury bonds because Japan and China are not buying them. So they're basically getting the retail people. Is
Yeah, so
that
they're creating a new buyer, which is going to be which is going to be the issuer of ROUSD, which is going to be the issuer of USDC, which is going to be the issuer
right?
of USDT, right?
Yeah, yeah, yeah,
Pay PayPal USD, these
yeah,
regulated centralized stable coins. Even
yeah.
Frax USD is has a backing using treasury bonds. Well,
Mm,
actually they use treasury bills, no tam. Well, let's just say treasuries period because it's a mix. So yeah, they
mm.
need this. They need this, and don't ever forget that. Ever, 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 ever. They need somewhere. This is also what's going on in Venezuela and all of that type of stuff. I'm not a political person. I personally don't subscribe to being political unless you're a billionaire or if you're on the streets and the ground like Asada Shakur or something like that. You know what I'm saying? I really don't subscribe to that. I don't think the average man is really political. They just think they are. But more to the point, whatever was going on in Venezuela and all of that, and the oil and all of that, Venezuela was selling their oil without dollars, right? And the U.S., the whole thing with their military is they bully people into selling their oil for $4, so that there is a market for dollars. You guys picking up what I'm putting down?
Yep, yep.
Okay, so there's some things going on. So they need people to use dollars. They need
Right.
people to buy these treasuries. And the other thing about it is because there was kind of this financial small financial movement that happened during the panorama. People started to take their money out 401ks and things like that, and that hurts them. Remember, I was talking about the assets under management. So that's why again they're becoming crypto friendly. Assets under management. Because if they not rocking with us, they against us, and if they against us, we taking money out of their system and putting it, you know what I'm saying, in our own little buckets, which is killing the AUM. Can't have it. Can't have it. But as far as the treasuries and stuff like that, where I was getting with this is some of the largest again buyers are the U.S. citizens, employees, W-2 U.S. citizen employees with your 401ks and your IRAs and whatever else y'all be having with and then the 529 plans with the children and all that crap, right? They be having bonds in those portfolios. Remember, because the traditional portfolio used to be what? 60-40 stocks and bonds, right?
Yeah.
But that if you did that, you underperformed the market like shit.
Mm.
But I say that to say that was the traditional investment portfolio because it was beneficial for the machine, right? The machine needs people to buy these treasuries. The machine needs people to buy these stocks, right? Because that's all we have. We don't have no real economy, no real production, I should say. Real production, I should say.
Mm.
So, you know,
Yeah,
it's a house of cards. It's a Ponzi on a Ponzi on top of a Ponzi. So,
yeah. Because I've been really thinking about stable coins and how like I see a reality where we will be able to use stable coins to buy groceries, to go to the movie theaters, and do all this stuff. But like we said, like
so
we're just switching to that's a new way for the treasury bonds and these. tr- the U.S. has a new customer basically because, like you said,
yeah,
China
they
and
need a new
Japan
customer base.
are
So
not
the new
doing
customer base is going to be these stablecoin issuers. The second
it.
is again the U.S. citizens and these W-2 with their 401ks and stuff, um, as well as just okay. So then you have the on-chain bonds, right? So now you have, for example, take Rwanda, right? Random country in Africa, right? Rwanda. Okay. Do you think somebody with a Rwandan, I think that's what it would be, a Rwandan passport is going to be able to get into U.S. markets to buy U.S. treasuries?
No.
Okay, but can they get some money on chain and mess around over there and get some bond exposure? Yeah, yeah.
Mm.
In fact, I was actually looking at something on Sui. I'll show you guys a little bit later. A little strategy I have over there, but yeah, they. So what I tweeted this like years ago, and I got to go back on my Twitter so I can pull up all this stuff because I tweeted their entire blueprint. Right, they want to dump on unsuspecting retail in so-called third world countries or whatever. Right, who will seemingly be happy to have access to the U.S. markets because it's seen as such a positive thing because of the whole colonialism and that whole psychological op they do on them. Um, they just dumping on these unsuspecting people, these shitty bonds, these shitty real estate, this shitty private credit, right? And that's sort of like that could be the negative side of it if you're not careful. But yeah, they definitely need these stablecoin issuers and stuff to, like I said, buy these treasuries because at the end of the day, the debt payment is it's so much that at this point it's impossible to even make headway on it. So we just gotta keep refinancing and keep making interest payments. That's where we're at. We're at the point where you can't even pay down the principal. You just gotta keep knocking some interest down. As far as the U.S. debt, let me share my screen. I'll pull up the debt clock for you guys.
You don't think it's possible to use crypto to erase the debt or even half of it?
Okay, so let me just say this. From what I've been learning about securities and our in leages and the social security number and SKV Act and you get into all that type of stuff. It could be handled if people knew if people actually knew what was happening. That's what I'll say on that. But people don't even know what's going on. You know what I'm saying? People don't even know their social security number is an account number. It's a credit card. Tell you that right there in 15 USC Title 15. It's a credit card. Dang, I just forgot what was I looking up? US debt clock. US debt clock. Dang, what the heck is this? I just want to see the debt clock. Okay, here we go. All right. So you see how it says debt per citizen, debt per taxpayer, U.S. national debt. You see how it's climbing.
Yep, I see it.
Okay, then we got money creation right here. Future U.S. Treasury dollars. So we got a lot of good information here, right? Okay, we see our precious metals reserves. Um, oh, they got the state debt on here now. That's interesting. Sorry, they added some new stuff. I'm just looking at it. But my point in showing you guys this, is simply to say, like, just look at the clock go as far as the national debt. You know what I'm saying? Like, how we tackling that? Again, with the majority of people being not even financially literate. And when I talk about financially literate, I actually mean financially literate. I don't mean what all these people mean on Instagram and just whatever. A lot of people talk about financial literacy, but I never see them talk about no type of financial laws. I never see them talk about. I see them talk about trust, but they be talking about statutory trust. They don't really be talking about real trust. They do, what I'm saying? They be talking about equity. So yeah, just be aware of that as well when you're talking to anybody and they supposed to be financially literate and they don't read no financial laws. They don't. They're not proficient in accounting. They don't have no balance sheet, no P&L. You know what I'm saying? So just beware of that. A lot of people talk that financial literacy stuff, but they don't never actually read financial stuff. But moving on. Um, I just wanted to show you guys this again, just to show you like this thing just climbs and climbs and climbs and climbs and climbs. Right? Total debt. Total. Okay, this is the one I wanted to show you guys. U.S. total interest paid. That's a crazy number. Right? We got one, two, three, four commas. That's a crazy number in interest paid. So my point again in showing you guys this is that at this point, from a fiscal perspective, like all they can do is manage the debt and the interest payments. We're not at a place of hitting any sort of principal. Yeah, it's just not. It's not realistic. We're not at a place of hitting no principal, right? Like we just gotta. And when I say we, I don't even want to say we because I ain't even a part of this. You know what I'm saying? Don't. Like, so let me rephrase that: the U.S. and the U.S. citizens, U.S. taxpayers. Okay, I have a U.S. taxpayer, but that don't make me a U.S. taxpayer, and that's free game for you. Um, yeah, you could see that's how much per citizen debt is, right? Like there's just no way that they tackling the principle. Yeah, and then this year, um, they have to like refinance like some kind of crazy billions a number. It's like it's multiple billions. I gotta find it. I seen it on Twitter the other day. But yeah, just be aware of that too. Something I wanted to show you guys because I did look this up. This is what I wanted to show you guys. They unlock exactly 1 billion at the start of each month. So I just wanted to show you guys that like that is how XRP enters the supply. Is because Ripple Lab pre-mined all of it and then they programmably dump it on the market and enter it into the market that way. Uh let's see. Something on um let's see. A couple other things I want to talk about. Um so yield basis, I don't know if you guys are familiar with this, but this was created by the same guy who created Curve. Michael, the guy I just showed you. Michael Egrove. Okay. And this is a liquidity pool without impermanent loss, and it focuses on Bitcoin first. Um, I showed you guys this before though, but just to kind of, oh, okay, ETH is on here now. Ooh, this is about to get real interesting. Okay, and the $25 million cap was already hit. Okay, so I want y'all to look at that. Those capacities are absolutely filled. Anytime there's any opening, I try to get in here. But what I really just want to show you guys is one, this is now a way to earn single-sided Bitcoin yield. Okay, and what that means is it's just Bitcoin. Like what Quick was showing us earlier, he was showing us his stablecoin pools, which are two tokens paired together, right? So he had USDC and Solana. Well, what I'm talking about is a single-sided LP, which is just Bitcoin. And now they've introduced just Ethereum, right? And this protocol is new, so maybe so far the math is math and it's working out, right? This guy, I'm not gonna pretend to completely comprehend the math or whatever, because he's like a super mathematician physicist. Like this guy could go be building crazy rockets and you know what I'm saying, but this is what he's doing, financial engineering. So anyway, I showed this to you guys just to say this is some single-sided Bitcoin yield. If you can get in, like I said, capacity is filled right now, but if you can get in where you fit in. You see what I'm saying? Another part is, the yield basis token. So you can come over here, lock some yield basis token, and what you're going to be earning is Bitcoin. You're also now going to be earning ETH because they have ETH open. But for the main part, you're going to be earning Bitcoin. So, if you want to have, okay, so you can see this is about 13.3 APR in Bitcoin. So you want to earn 13% on your money in Bitcoin, this is a good little place. And so obviously you have to lock those tokens up. If you want something more liquid, that would be the LP if you can get in. So yeah. Next, actually, yeah, next I want to touch on
What's that guy's Twitter name again? Real quick. I'll just go
Michael
back. Michael. Okay.
Michael Igorov. Okay, yeah, so he's the guy who created Curve, okay?
Okay.
Curve Finance. And I was telling you guys about Curve Finance, which you can LP over there, and I don't have to worry about managing my liquidity or any of that. Curve does it on the background. And again, Curve hasn't necessarily been the best investment, although it is the best tech. So, just putting that out there. Yeah, I'm not a super actually let me not say that. Um Dang, I forgot what
Okay.
I was just about to show
Yeah,
you
I know.
guys.
He was about to go next
Oh,
thing.
Uniswap stuff. Yeah, that's what I want to get into now. So Uniswap. Are any of you guys familiar with? Oh, we had a question. Let me see. We don't know how to access our inheritance, which is the social security number. Yeah, so in 1933, you know, HDR 192, I believe it is, was passed, and it said U.S. citizens are required. Remember what I said. I have a taxpayer that I am the authorized representative for, right? But I am not the taxpayer, right? So, like I said, 1933, they put out, all U.S. citizens are to return, to bring all their gold to the government or whatever. And people actually fell for it and gave up their gold to the government, which is actually insane. I ain't giving the government, well, let me not say that on here. But one thing I will say is, I respect my right to privacy. And I also respect my right to create private contracts, right? Which is Article 1, Section 10, Clause 1 of the United States Constitution, which is the contract clause. And I respect my right to contract, and I'm going to create a contract, which means I don't own anything and the contract owns it, which is a trust, if you're not picking up what I'm putting down. So that's what I'll say for internet purposes. Um, but yeah, I'm not giving up. I'm not giving up nothing. Um, yeah, I'm like Montezuma. You know what I'm saying? You're gonna have to knock me off. I'm not with that. But everybody got their own thing going on. So like I said, in 1933 they convinced everybody they were supposed they what they did is they convinced everybody that they were US citizens. And by thus convincing everybody that they were US citizens, they convinced them that they were obligated to give up all their gold. But that wasn't really the case, and that wasn't true. So then they gave up all their gold to the government because the government was in bankruptcy. Once they gave up their gold, then it became a receivership, right? Which is a certain type of bankruptcy, okay? Which is where we are now. And the gold was essentially collateral and a payment on some of that debt, which is why you'll never see an audit on Fort Knox, which is where the gold is supposed to be. Dang, where was I going with this? But yeah, they made them give up the gold. Oh, the social security number. Okay, it's coming to me. All right, so boom. We give up the gold, and then in return, we get these social security numbers, right? An account number. And at first, this was supposed to be for you to, when you go work a job or whatever, so they could put up some money for you for when you get old, right? Because people weren't saving for retirement and so on and so forth. And so when they got old, they didn't have shit and they were destitute. And that was a real issue, which was the creation of the Social Security Trust Fund, which, by the way, a lot of people don't know. that Congress can borrow against that Social Security trust fund, which is why I never gave any money to it. And you shouldn't either because it's voluntary. And all the money that if you're working right now a W-2 and you pay money into a Social Security trust fund, that money is going to the people who are being paid out today. That money ain't going to you. You don't have no claim on it. There's court case on that. So just FYI. But yeah, and mathematically that money's not, again, that money's not going to be there because Congress borrowed against it, so they got to pay that. Then, the money that's coming in and now is going to go pay the people who are on Social Security today, right? Like your grandparents, my grandparents, and so on and so forth. So by the time you become a grandparent, ain't gonna be no money, you know. So, but what you were saying was we don't know how to access our inheritance, which is the Social Security number. Yeah, that's what I was talking about with being financially literate. A lot of people talk about this whole financial literacy movement, but again, I never see them reading any financial laws. Isn't that what it means to be literate? Is to read? I don't know. Somebody let me know. I'm gonna move on to Uniswap now, though. Let me go back to share my screen. Yes, indeed. Yeah, that's what it means to be financially literate. You gotta read. And they do not be reading. Otherwise, they would know the Social Security number is a credit card. Tells you that in Title 15. Go look it up. Social Security number is a credit card. And what else is a credit card is your license plate, driver's license, ID. Anything with a number attached to it and attached to that Social Security number is a credit card. Yeah, never forget that. Because I want you to think about this. What if I go to pick a random country in the world, right? Let's say one of the islands. If I go to Dominican Republic, can I go to Dominican Republic and give them that number and get a car the same way I do in the United States? Another thing I'll say is this: if you look worldwide, it all happened at the same time, which shows there's a conspiracy going on. You see what I'm saying? As far as the Social Security number being implemented, and then everywhere else in the world is called social insurance, right? If you look in Canada, if you look at India, it's called social insurance, which is interesting, right? Because right after we gave them up all their gold, they gave us insurance. Yeah, there's a lot to it, but there also isn't. It's pretty simple. But what I was saying is, if I go into a car dealership today, or if I go into a bank today, I can give them an account number, a credit card number, which is my social security number, right? And then they're gonna ask me to sign it. But why? Not because it's my social security number, but because I'm the authorized representative of the social security number. So they need my signature. And if any of you guys know about power of attorneys or anything like that, it's like that. If you were incapacitated and your parent or your wife has a power of attorney or something, they can make decisions for you legally. It's on that type of level. And we are the attorney. What is it called? Attorney in fact for the sole proprietor or the enlegis, whatever you want to call it. But it's a credit card. If I go to the dealership, I can give them that number, sign, and they gonna let me walk out with a car. So you telling me they getting paid? Can't tell me they're not. Um. Okay, what I wanted to show you guys was it's not coming up on here. Let me see if I can find it. So Uniswap recently had a governor's proposal to open up their to turn on the fee switch essentially and to turn off the interface fees. So remember I was telling you guys, if you guys have been on a few of these calls, never swap on uniswap.com itself because they have a 0.25 interface fee. So you're going to pay 0.25 extra per swap if you're using their front end, right? Because they had a front end fee. And so with the unification governance proposal, they took off the interface fees, right, and the API fees. The other thing that they did, and um, and I actually really don't think this is going to be a good move for Uniswap, but only time will tell. So basically, what happened before is LPs would take 100% of the fees made, right? And the way Uniswap got paid was really like the front end fees, the API, and just a little bit of like the actual transaction fees happening. But really, it was the API and stuff, right? And LPs took 100% of the fees. And now with this unification proposal, 20% is going to go to the Uniswap DAO, and they're going to use it to burn Uni tokens, which means LPs are only going to get 80% of the fees now, which is a dramatic difference, right? So, instead of getting $1, you're getting 80 cents. That changes the equation completely. And I'm being honest with you, I really don't understand why Uniswap did this. I mean, I do because they wanted to compete with Aerodrome and stuff like that, but you're not Aerodrome, right? Like, you guys have a certain model, the way you guys have been siphoning money, and, Uniswap token has been a shit token since inception, and I don't really think this changes anything. Especially, like I said, because, you know, instead of getting $1, LPs are now getting 80 cents. So what incentives do LPs have to keep supplying liquidity to Uniswap? And so over time, we may see Uniswap lose its lead, especially as I move on. Let's go to let's go to Metadex, Dromos. Okay, so if you guys aren't familiar with Aerodrome or Velodrome, it's another. Let me actually just go to Aerodrome so you can see the website. It's just another decentralized exchange, and the difference. Actually, let me see if I can find. Give me one second, cause there's this photo. There's this photo that shows the way the incentives flow. I don't know if I'm be able to find it. I might not be able to find it. Okay, but the main thing I want to kind of say is that the difference here is that with Aerodrome, so LPs either stake to earn Aero rewards, or they don't stake and they earn I believe it's I believe they earn 80% of the fees, and then 20% goes to token holders. So the way it works is that you can buy Aerodrome and you can lock it for VE Aero, and in doing so, you get rights to revenue and governance for the Aerodrome protocol. So the fees that are earned. So basically, when LP providers choose to stake instead of not stake, so if they stake, they earn rewards, and if they don't stake, they earn fees. Just to kind of keep it simple. So if they opt to stake and earn rewards, all their fees get routed to the Arrow token lockers or the V Arrow holders, and that's how the V Arrow holders get paid. So if you lock V Arrow, you can get paid weekly based on the fees that not the chain, but the protocol made. I was trying to find, because there's this picture of the incentives. Okay. All right, so I'll kind of just read this. A protocol fee is introduced, which cuts the yield that LPs earn. LPs start withdrawing their liquidity, which worsens the slippage traders experience. Volumes decrease, which lowers the fee yield paid to LPs. LPs thus withdraw their liquidity even further, which worsens the slippage the traders experience. Volumes decrease further, which causes liquidity to decrease further, repeating in a cycle until some equilibrium is reached. And so, quite honestly, what this is describing is what I personally think is going to happen to Uniswap Labs now, or Uniswap protocol rather now, that LPs only earn 80 cents on the dollar instead of a full dollar, right? I feel like LPs are they may start to withdraw their liquidity. There are uni token incentives, but is it going to equal out? I don't know. I don't know. Let me see if I can find. Because there's this graphic that they made that shows how the token flows. I'll be able to find it. So, as a result of basically Uniswap proposal to turn on the fee switch, and Aerodrome and Velodrome merge into one platform, there's been this like kind of back and forth on Twitter with the Uniswap people and Aerodrome, basically trying to figure out which one is actually more profitable. Dang, I really can't find this graphic. That's crazy. I don't know why I can't find it right now. I'll probably find it later. But yeah, there's been like this whole thing going on between the Aerodrome people and Uniswap, mostly because a lot of people don't actually comprehend how Aerodrome works, and that it actually is, somewhat profitable, especially for both LPs and VE Aero lockers. Something else I wanted to show you guys. Oh yeah. Okay. So this is Bitcoin, Bitcoin price, and this it's like a social risk meter. So if you guys can see this, the circles that he's drawing, right? When Bitcoin tops out, so does that social, what does he call it? Social risk meter. It tops out as well. And in 2026, it was, or I guess rather the end of 2025, it was like bottoming out completely, which kind of signals, and then you can see the Bitcoin price chart is in that teal color. But this basically signals that the market hasn't topped yet from like a social risk perspective, I guess, for that metric he's using, which is right in line with what I was saying with the ISM. There was no new liquidity in the system, so even if there was like a little mini bull market within that specific market, there was no larger bull market because there wasn't any extra liquidity. So, needless to say, the bull market was never over.
It's just so unfortunate how people are going to just want to care when it's already at the top. It's just,
Yep,
yeah, yeah. Like that's also what that chart kind of showed. Like when everybody cared was the top. You
top
know?
exactly. That's kind of basically exactly what the social risk is showing you.
Yeah.
Is exactly what you said. And then again with the macro perspective, we have rate cuts coming this year. We have money printing coming. We find out about this tariff check. You know what I'm saying? So we have some bullish catalysts that are forming, as well as just the general fact that liquidity is it's about to be less constrained. It's about to flow better, and that's what creates these up markets and these bull markets. Is new liquidity. Uh, okay, I'm gonna show you guys, kind of switch over since we were talking about Soul. Let me find it.
It's on accumulation chart, something like that.
Yeah, could you guys see that? I
No,
think my
no.
screen stopped sharing.
Yeah, stop sharing. Mhm.
Okay, hold on, let me go back so you guys can see this. This is a bit of what I was showing you when I was looking at the ETH versus BTC chart myself. Was just that oh no, not that, this one. Where was it? This one. All right. I don't want to hear him talk about it. But just in terms of the picture I was showing you guys, the ETH Bitcoin chart I was showing you guys myself, right? About how, you know, obviously he's pointing out like this was an accumulation phase. Then we have a reaccumulation of when Ethereum was basically becoming worth less in terms of Bitcoin. And then kind of like that channel that he's drawn is that it's above that channel and it's ready to pop more to more upside, right? Which makes sense because we know Ethereum hasn't really had any real move this entire cycle. But that also, again, goes hand in hand with what I was saying about the liquidity. There really hasn't been any new liquidity in the market. So, yeah. Oh, the other thing is, being Kwaku, we were talking about this other day. The 4 year cycle is now null and void, which I had been saying kind of before it became null and void that it didn't exist. But now we have that confirmation that it never existed. There is no such thing as a Bitcoin cycle. There is no such thing as a 4 year cycle. There is only a business cycle. And just kind of go back to the chart, ISM, just from this, like, we've been in a consolidation, or not consolidation, excuse me, but a business cycle contraction as far as liquidity is being contracted. Right, like if you, which basically means if I go to the bank, they're less likely to lend me money versus more likely. They're more likely to ask for more collateral, more documentation to give me some money. Versus in a more liquid market, I can just kind of walk in as long as I got a pulse, they give me some money. And so we can see that the business cycle has been compressed for 3 years. Well, I guess you could say like 2.5, because it obviously topped out here in 2021 and then just straight down climb. Yeah, I would say maybe about 2.5 years of just, tight liquidity conditions globally everywhere. So until we really see a pop in this, you know, the full market isn't going to do what people want it to do yet because we need more liquidity. That's just the way markets work, fortunately or unfortunately. Okay, so moving on. This is a new gold yield platform on the Solana network. All right, so you can get in with your USDC, and you can buy an ounce of gold, and you can come over here to the Earn tab. And the thing about it is, you do have to lock it up. You do have to lock it up for a year. For the 3 to 4%. That is kind of, if you want to say, downside. And then another way is kind of just to get into their liquidity pool. And if you don't want to be in a lock position, but you still want to have some gold exposure on a Solana network, this could be or this is a way to do it rather. And as you can see, it's a dynamic liquidity pool on Meteor. See how much is in there. Okay, so they got that's not bad. $791,000 in there. So I wanted to show you guys that. And this is new, like I said. If you're looking for, you know, something else to do on Solana. Any questions, comments, or anything?
So that one was just a straight USDC and gold liquidity pool pair.
Yes. Let me go back for you.
Mm. Another way to get more exposure to gold on the Solana network. Wow. Even though it's
Yep.
tokenized, it's still it. But the thing is, gold isn't gonna like it's like it's not gonna drop as steeply as Solana would.
Yep.
So it's kind of another way to protect your profits or your assets and earn at the same time.
Yeah, to kind of protect a dollar denominated principal value
Hmm.
is to be in it, especially um like I said, I do think Bitcoin is gonna have a bit of outperformance here,
Yeah.
but I also don't see gold stopping here. We, in my opinion, are in the beginnings of a commodity super cycle. You
But
know,
even if Bitcoin outperforms gold, uh, since with liquidity, it will put more of that into gold. So it's kind of like your dollar cost averaging more in gold. Is that
yeah,
right?
exactly. Yeah,
Yeah.
you'd be dollar cost averaging more into gold. It's not a negative. It's just to say, um, I said it to say. So if you get in here at like 4,500, gold may see 5,500, but it might not see 7,500 in this year. You see what I'm saying? Or maybe after Bitcoin does what it does, then we get gold to 7,500 as far as your dollar denominated appreciation
Hmm.
or
Hmm.
upside. It's not to say it's capped, it's just to say it's kind of Bitcoin's turn now and then it'll flip again.
Hmm.
But this isn't bad though. 3%, 2.5%, 3% on gold and USDC. That's not bad.
Hmm.
It's not bad at all.
Yeah, I agree.
Yep.
There's really no excuse now to not get access to gold.
Yeah, exactly. And there's just so many ways to just throw some money on chain and have it do something
Mm.
with such ease. You know, definitely want to see way more people doing that as time goes forward, especially just with stablecoins. Oh, that brings me to what I was saying about Sui. Oh, is it not Navi.com? Okay, so was it on this one? Oh yeah, it was on this one. Okay, so something I was looking at sort of. I'm not really big on Sui. I don't know exactly how you say it. But I don't know. I was kind of looking at some Solana alternatives to get a bit of exposure to. Not that I don't think Solana's gonna do well or anything. I just kind of maybe get a little exposure to this. So I don't really want to buy Sui or Sway. I don't know how you say it. We'll just go with Sui. I really don't want to buy it, quite frankly. So I was looking at a way for me to earn it, and I came across. Here we are. Matrix Docs Gold. Can you see this? Right. So I can come over here and supply for 6.3% that I would be earning in gold, which is pretty darn good. Why is it not coming up? Okay, here we go. So you can see I'm actually earning this in this is the Deep Book token. So this is an altcoin on the Sway network, and I will be earning 6.3% in that Deep Book token. So that will give me a bit of altcoin exposure over here. Then you can see I could take that deep, throw it over here for 20%. Okay. Um, what was the other one? I just lost it. Oh, here it is. And then this was the treasury. Treasuries over here. So this is the other one I was looking at. So I can earn 4.6 on the base treasury plus 3.7 plus 2.8 in SUI tokens. And this is on dollars, right? And kind of what I was thinking of doing is taking, let me go back here, taking this deep book token that I would earn, swapping it into SUI, and throwing it on here, earning some interest, and then did I just lose it again? Here it is. And then throwing some stables into this USDY, which is a treasury, and earn some stablecoin yield over here. And that's kind of what I'm looking at for a SUI strategy. And let me just show you guys. And I just kind of will say this. The reason why I never really got into SUI last year in the summer, not 2025, 2024 rather. In the summer when I saw a lot of people talking about it and stuff. Mainly just because it was new. Also, if you guys know Raul Paul, who's a VC, I don't want to say I don't trust anything he's involved in, but I do very much take a certain glance at the things that he's involved in. And he has a heavy Sui bag. He'll tell you this is like his heaviest bag. But of course, he had a VC allocation, so it's a bit different than you and me. The other reason, like I said, was mostly just because it was new. And then when I was on there, the decentralized, the only website that I felt safe using was this one, Navi. This first one I showed you guys, like when it first came out, like when Sway, the network itself. Like this was really the only one felt comfortable using, and I was like, if all I could do over here is this, I'm probably not that interested yet. I want to see it mature and stuff like that. You guys saw what happened with the Cetus Dex hack, and in my opinion, that team was very negligent because that could have been avoided because the fix that needed to or the bug or whatever that needed to be patched, that fix was already there the year prior, so they could have, or maybe not a full year, but at least like 5 months prior, so they could have fixed that issue already. But yeah, it was a bit of negligence in my opinion. But luckily, the Sway Foundation stepped in, gave them a loan to bail them out. You know. Then the other Dex was Turbos, and that website was just so glitchy and just buggy. Like I can't put my money on something so buggy and glitchy. I just can't do it. It needs to be smooth. It needs to have a certain feel to it. And like I said, Navi was the only thing that I felt safe with at the time, so I never got in. I was like, let me just let it mature. And I'm actually glad I did that because they had their first hack, right? See this? And now I can see, how the network deals with things and so on and so forth, which makes me more comfortable. But I'm still not looking to really be in liquidity pools or anything over here, to be honest with you guys. Just this sort of basic lending stuff. So to show you the other part of what I was looking at over here was, I think I just scrolled past. Okay, yeah, I did. So the other one I was looking at is AUSD over here, and kind of just applying some stable coins to this AUSD and earning SUI. Like I said, I don't want to buy SUI. I just want to get some exposure. I want to gain exposure and throwing some stable coins on the chain, and I'm earning 6.6% in Sui. I'm comfortable with that versus buying a bag. You know what I'm saying? Parking $5,000 here versus buying $5,000 of Sui. Yeah, I think that was the only one I was looking at on Suiland. Yeah, that was it. I was just looking at the AUSD. Wasn't really interested in anything else. And then taking that, obviously that Sui that I'm earning, and then supplying it on here and earning more interest. So kind of just to go back, I'll check. Right, my main thing was gold exposure. So they have matrix stock gold. Come over here, I can earn. Actually, it might be higher on Soyland right now. Yeah, it is. So I might do it on Soyland. But either way, to have gold exposure, and then I want to be able to have Sui exposure and earn some Sui, which is going to be this AUSD for me. Come over here and earn, 6.8% or 6.3% in Sui, and then throw that Sui in here, earn 3.3% on that, and just kind of cook it like that.
So on the Navi website, when you supply the gold, you get exposed. They give you rewards, and or I guess the interest you're making is also in gold as well, or is it in another
No,
coin?
so the interest you're earning is in this altcoin, Deep Book token.
Okay,
And so
okay,
what I'm looking to do is to earn that token, swap it for Sui,
okay. Got you, got you.
and then start to grow a Sui bag. Does that make sense?
Okay,
From
okay.
that interest. And then throw stable wait shit, what did I do? Oh, here it is. Those stable coins over here on this AUSD one, right? Because this is
Mhm,
actually paying me, as you can see, 6.3 in Sui rewards. So
mhm,
throwing some stable coins over here to earn the Sui itself. Throw that Sui over here, earn 3.3% on that. Throw gold on here,
mhm.
earn, between 6 and 7%. And then take that altcoin that I'm earning, turn it into Sui, and add it in here. And then the other one I was looking at is just the fact of this treasury yield was pretty good. You don't really earn a lot in Sui, but pretty good stablecoin yield though.
Mm. And that's on the USD1, USDY. That-
Yeah, USDY, and I believe that is by Circle. That is their treasury yielding stablecoin.
mm. So you're getting exposure to gold and SUI at the same time, basically with
Yeah,
that.
yeah,
Mm.
exactly. And then stablecoin having just a
Right,
stablecoin on here that I'm
right.
earning
Which
SUI
the
on
SUI.
essentially. Yeah,
I
so
just want to
that's
let y'all know, y'all, these are real strategies that you can use when we get off this call. Like we are doing the work for y'all and vetting the platforms and literally giving you the strategies to just do it. Like that. This is
yeah,
amazing.
like
This is amazing.
yeah,
Yeah.
exactly. People will probably want you to pay tens of $1,000s for something so simple, but it's like Quick was saying, we were vetting these. I'm not just picking any stablecoin on here. I'm not just picking any sort of tokenized gold. Matrix stock has been around for a long time. They're actually native to Binance Smart Chain. So if you're familiar with that ecosystem, they're around over there. That's like where their deepest liquidity is. And then they came over here to the Sui network. So yeah, I kind of was like I said, I was looking at how can I get a bit of alt L1 exposure, but not have to buy the token. So that's kind of if you guys are familiar with the stuff I was showing you with Avalanche and all of that, most of that is based on the fact that there are Avalanche rewards on everything that I'm doing. So I'm earning AVAX If it wasn't for those awards, I wouldn't be over there. Just keeping it real. I really don't. I'm not saying I don't have faith necessarily in the network, but those incentives is what's gonna keep me there. And now I'm getting more. In that particular instance, I'm getting more AVAX exposure without having to buy it. I'm getting it for free. I'm earning it. And so taking that strategy to another all at one, where again, I see soy. Oh, the other part was I wanted to kind of wait it out after the token unlock in I think it was September or October. That's why the price dumped so much because they had a token unlock, and that's something you should also pay attention to when you're in these newer coins, especially these VC coins like Sui. When are these tokens unlocking? Because the VCs will dump on you. Okay, and you'll be like, oh, the market is hot, everything should go up, but then your token goes down. Token unlocks. But yeah, so that's my Sui strategy. Come over here, deposit AUSD, earn Sui, take that Sui, stake it up here, 3.3%. Put some matrix docs over here, either on Soyland or on Navi, and take what I earn, convert it to Sui, and earn on that, and just keep it going. And see how much Sui I can earn before it gets back to $3. Any questions or anything? This was my second gold strategy for you guys.
Do you have any potential silver strategies?
Yeah, silver. Only silver strategies I know is on Folks Finance. I'm not familiar with any other anywhere else. Didn't mean to do that.
Because people are saying silver might be more for the lower, middle class to really get ahead and whatnot. You know.
Nah, gold is for the middle
Oh yeah.
class
Okay.
or the lower class gold. And the reason why I say this is gold is an actual store of value. You can look this up. You can look it up against inflation. You can look it up over hundreds of years. You can look it up over 2,000 years. You can look it up over 5,000 years, okay? A loaf of bread, a good suit, a nice pair of shoes, a house, all are relatively the same price in gold. So gold is for the lower middle class as well. People people get priced themselves out psychologically because of the number. But in the tokenization space that doesn't really matter because like I said you could buy a penny's worth. You know what I mean? In a real world sense, I still would say the same thing. Because gold is an actual store of value. Silver, it's behaves differently. It's different. So yeah, I'm not saying don't get it, but like if you're talking to middle lower class, no, you want gold. That's your actual store value.
Maybe silver is more like a utility. More.
Yeah, it's
Maybe.
more. It's definitely more of a utility. It's something that you're going to get more multiples on when the multiples come, right? But as far as store value, as far as inflation hedge, that's gold, not silver. And again, that's not to say silver's bad or anything like that. I have silver, love silver. It performs well, but that's how I see it though.
Yeah. Oh, were you gonna show the
Yeah, I'm gonna show
platform?
you guys
Okay.
now.
Okay. Cool.
Oh yeah, and what I was saying was like people at price get them out, psych them out of getting into something, but it's like you can buy $100 worth of gold. You can buy, you know, like what I'm saying, you could buy gold coins that cost, you know, $500 or whatever the case may be. You don't have to buy a full ounce of gold at, 4,500. You even gotta buy half at 2 grand, right? You can buy even smaller portions, or you can, you know, Put your money up and then buy an ounce. Then put your money up, buy an ounce. You know what I'm saying? And rock it like that. But yeah, I'm not sure who said that, but I wouldn't necessarily say that. Gold to me is for lower middle class because it's an actual store value. Over time, again, you can look this up. You can ask your favorite, you know, Grok or Perplexity or whoever you want to ask. But yeah. So tokenized silver. You guys can see my screen.
Yeah, we see it.
Okay, cool. We've got what is that? 2 million, 2.3 million in silver, 1.3 million in gold, and you can lend it. You can borrow it. In fact, I do have a portfolio over here on Folks Finance, and I have a loan that's called Precious Metals, and it's just gold and silver in that loan. And I continued to add more and add more, and as it went up, I borrowed some against it, added some more to it, basically looped it. Yeah, but this excuse me, this is the only place I know where you can get on-chain silver exposure so far. There has been more interest in silver since it's popped 70, since it's popped 50, you know what I mean? Of tokenizing it further, but for the most part, folks finance. Let me see if Matrix. Mm-mm.
And when you
Yeah,
say
we
you
just have gold on Matrix stocks.
and when you say you were doing the looping, what's that mean? Like you were borrow out from one and then supply that into another metal or something like that? Like,
More what I mean by that is I had a loan account that I named Precious Metal. So if you come over here, my wallet's not connected, so it's not gonna let me do the whole thing or whatever. But I had a loan. I called it Precious Metal Loan, and all I had in that particular loan was gold and silver. And what I was doing is I had a USDC LP over on Lofty AI, and it was doing like 20%. And what I would do is like once a month I would claim that stable coins, and depending upon which one was up and which one was down is what I would put it in. And sometimes I would do a 50-50 split, silver gold. But I would take that stable coins that I earn and buy more gold and silver with it and add it to my collateral. And then over time what I did is I borrowed a little bit out, but I was only doing like a 20 to, max was like a 20% LTV. I wasn't taking out like 50, 100, not 100, but I wasn't taking out like 50, 80% of the money. I was only taking out 20% at a time. And I would borrow against it, take that borrowed money and take those stables and either supply them to earn some interest, or I would put them in a liquidity pool to earn some yield on it. Then I would take that yield and buy more gold and silver. And then over time, as like gold and silver went up, I had more money. I borrowed more stable coins against it. And then what I meant by looping is I took those stable coins and I just straight up bought more gold and silver and immediately collateralized that gold and silver into that loan. That's what I meant by looping it.
got you. Increasing your exposure. Okay. That. All right. All right. Oh, I think she dropped out real quick. Oh, dang. Yeah, she might have dropped out. Yeah, but that's fire though. Definitely been wanting to get more involved with the precious metals, and this is definitely a great way to do so. Especially with us being able to collateralize on it as well.
Peace. I'm not sure why it kicked me off, but did you guys hear that?
I heard the last part. Well, not you. You did get cut off though. You got cut off.
Okay. The main thing kind of is just I'll just kind of simply reiterate it. I had an isolated loan with just gold and silver in it,
Hmm.
and I had already had a um USDC pool set up where I was earning like 15-20%. And so I decided to redirect those earnings to build up my gold and silver portfolio.
Hmm.
And then over time, it got to a certain point where I was like, okay, well, now I have $500 here. I'll take 20% out in stable coins, and then I'll go earn some more on those stable coins. And then take that yield and buy more gold and silver and just kind of keep doing that. And then, like I said, when I would see the LTV get to a certain point, like if it got above 20, really, I was like, yeah, let me pay that down. Let me pay that down.
Hmm. So you're saying like, yeah, you were borrowing against the gold to
Hmm.
apply the stable coin pool you already had to
Yep,
then
to add more to that so I could earn more. And then I
right
would take that yield and loop it in the sense that I would buy more gold and add that to that loan portfolio.
to increase your amount of gold you're exposed to.
Collateral. Yeah.
Your collateral, yeah, yeah, got you.
Yep. Yep. Because I'm not necessarily earning a lot on the gold and stuff. As you can see, it's like 0.5%,
Right,
0.11%. You're not really, you know what I'm
yeah,
saying, gonna break the bank on that.
yeah,
But the appreciation effect of the fact that I was doing this from like 2023 till now, you guys can imagine that appreciative effect, right?
mm, yeah,
And the consistency of taking that stablecoin earnings and buying more gold and silver.
mm, yeah. That's dope.
Yep.
That's the wow. Your
Yep. So that
strategist.
was, yeah, that's and it's still my move. I still have that portfolio on that loan going.
Mhm.
Um,
And what was that? A stable coin pool? You said it was called Lofty AI.
yeah, I can show you guys what I mean.
Oh, Lo-Fi.
Oh wait, no, that ain't. Hold
Oh,
on. Sorry, I haven't been on that website in forever. Let me see. What's the domain again? Oh no, it's with a Y. That's why. It's with a Y.
oh,
Lofty. That's why I'm like, wait, why is it not coming up? Yeah, that was the domain. Okay, it was with a Y. Okay. Blah, blah, blah.
you got real estate.
So if we come over here to the AMAs, okay. So when I say I was supplying USDC, this is where I was supplying it. So I would come to this market, and
These are like ad street addresses.
yeah, these are houses, token houses that you're supplying USDC to the market, so that when people get out of their property interests, there are stable coins available for them to go into. So, yeah. But so it's gonna make me connect my wallet in. Yeah, all right. I don't want to do all that, but anyway, the point I was just showing you is that I can select and then I can put some stable coins in here, and earn a good yield. And it's single, like I said, it's single sided. Is you're just adding USDC to this pool, so I earn a pretty good yield on that. And then I would take that yield and loop it. Yep. So that was my and I still, like I said, I still have this active. I'm not saying I've shut it down. It's still working. Um, yeah. Especially with what has silver has done, it definitely has made me value this portfolio more. And the other part about it is getting into the metals on chain and using them as collateral. What it taught me is, gold is fairly, it's not that volatile compared to something like Ethereum or Solana or Algorand or Bitcoin even, right? It's not as volatile. So what that allows is it's just less volatile, so I have to worry less about my loan health, right? Just to keep it simple. And the stability that adds to a portfolio while also having an appreciative effect, right? Because if I add stablecoin stores